All right. There we go. What's up, guys? Welcome everyone to the Fivers live trading room. It's Tuesday. It is Tuesday. What date it is, I don't know. It's the 29th of July. That's the date. 10:30 where I am in Sweden. Hope you guys are having a wonderful Tuesday. Let me know where you guys are from. I would like to say good morning, but obviously I think that for most of you, it's not morning. Let me know where you guys are from. Would be interesting to hear. I know we have a very global, diverse community here. Would love to see where you guys are from. We got Nora FX ready to take that first spot in the battle of the comments section. We got the caps lock guy always in here with highly valuable, knowledgeable advice for all of us. Michael, Germany. What's up, Germany? What's up, Nepal? What's up, Luxembourg? What's up, Nepal? Oh, 2 people from Nepal. Where's all the Indian guys? We have a huge Indian community. That's it. That's there you are. Here we go. Morocco as well. Portugal. Comment section is loading a bit slow here, though. There we go. Got Italia, Italy, South Africa, India. There we go. Got Pablo. Good morning. Lots of people in here. Malaysia. Malaysia. Yeah, that's right. Ellis, you're in Malaysia. That's pretty cool, man. Got India. There we go. Wow, we got a lot of people. A lot of Pipland. I like that. Pipland. Should definitely we should definitely take over a part of land and just call it Pipland. Now listening to the Slovenia, London. Wow, we got a lot of people. Okay, let's actually focus on some trading here. All right, good to be back. I was on vacation. I'm not sure if you can call it vacation because we went. My son had a football tournament, so we kind of went to another town, nice town called Halmstad. If you're aware of Sweden, you know that Halmstad is a nice little coastal city, very beautiful city. First time being there. Had a football tournament. Yeah. And we stayed another day at a beautiful hotel. Very cool place. But you know what it is, vacation with kids is it's nice. Yeah, it's nice. It's not really vacation though, but it's like it's good to be away. All right. But finally, we're back for some live trading here with you guys. What are you guys watching today? What do you guys want me to be watching? And I figured, I got gold open here because that's, you're all just going to comment gold anyway. So I figured we're going to take a look at the gold. I haven't been trading much. I've just had my algos running in the background while gone. But then my you know what happened, right? You know what happened. So we had this, we were away. And then this, it was like this thunderstorm or whatever coming over the city. So my mother-in-law decided to pull the plug on the TV or something because what if the TV I don't know, whatever. But not only did she pull the plug on the TV, she had also pulled the plug on the Wi-Fi router, which means my little trading PC, the little trading server, didn't have any internet. So that sucks. But it did open a pretty good trade on USD before that happened. So I'm going to be sharing with you guys the update on that. The update on that account, the algo trading account that we've got going. By the way, guys, we have a huge giveaway coming up. We just hit 80K subscribers on the channel, so congratulations to you guys. Congratulations to the Fivers, but most importantly, congratulations to you guys, because that means the channel is growing rapidly, which means we're going to be able to bring in more guests, bigger guests. We're going to be able to really increase the value and the quality of the content that we are able to deliver for you guys. And of course, like I always say, the reason I'm here, the reason we are here is because of you guys. Without you guys, we would not have this wonderful community or this YouTube channel that we have right here. So, of course, we're going to be giving back to the community. And we're going to give away 10 evaluation accounts. We're going to give away 5 high stakes accounts. And we're also going to give away 5 bootcamp accounts. I'm also gonna ask Saul, the CEO, maybe we can do something extra, you know, because this is a big number. 80,000 is a big number. Maybe we can do it a little bit extra. Let me know in the comments if there's anything. You have any suggestions? Any suggestions in the comments? Let me know about that one. And yeah. Now I'm trying to log into the Fiverr's hub and I get this question, am I a human? And I have to click these images, and I swear to God, I've been doing this sometimes for like 10 minutes. Like I start to question my own humanity, you know, my like, okay, so now it wants me to press all the images of stairs. I guess I'm pressing all the images of stairs. Oh, nice. Apparently I know what a stair looks like. I'm in. Okay, so we're gonna look at the, I'm gonna update you guys on the trading account here, the bootcamp account that I got. Let me go in and share that window right away before we jump into the live trading session. Guys, make sure that you hit that like. It's that little, it's that liking of the YouTube live stream that enables us to bring in more people here, and it's really such a small gesture from you guys, but it really does mean the world to us. Okay, so this is the bootcamp account. This is the what is this? The starts with 20k, I guess. I don't know, 25k. Who cares? Okay, so as you can see right here, we are close to the profit target right here. The equity curve looks. Honestly, I feel like there's no stability in this equity curve. I don't really like that. I don't like to, you know, what I want to be seeing from an equity curve is stability. So one of the main things that I look for when I develop algorithmic trading systems is I'm not looking at the profit factor that much. I'm not looking at the Sharpe ratio too much. I think one of the most underrated statistics when developing a trading system is the stability of the equity curve, because if the stability is high, so you measure stability from, let's say, 0 to 1, you know, if you have stability being 1, it's like perfect, right? I'm not sure you can have stability above 1, but what I'm looking for is strategies that have a stability. Now maybe different softwares are looking at stability and calculating stability differently, but the softwares that I'm using is looking at stability, and then what I've seen is a stability above 8, closer to 9, is usually very good. This equity graph that we're looking at right here would have a stability that is very low, okay, very low, because as you can see, a good-looking equity graph with a high stability would have like a 45-degree angle, and then just moving from down here straight up to the upper right corner of that graph. But what you're seeing right here is flat price action, or is flat equity curve. You go up, flat, and then down. Very big move to the downside and a huge move to the upside, big move to the downside with several trades. So you see here that there's not a lot of symmetry between the trades. There's not a lot of stability in the equity curve. So even though I'm probably going to pass this first stage of the bootcamp account, this is just not a good equity curve in my opinion. You want a high stability equity curve. Now, of course, if you're able to make money like this, if this is a long-term, this is what it's going to look like long-term, and it's still going to be making money, then whatever, you know, if you make money, if you're long-term profitable, even with a low stability equity curve, then, you know, you do whatever works for you, right? But the issue here with a low stability equity curve is that when you have a low stability equity curve, it tells you that drawdowns can be big, and drawdowns can be quite irregular, and they can be, you know, it just feels unsustainable. But anyway, that's the update on the algo portfolio. As you can see, so none of these trades have I done anything manual with. Okay, this is just 100% automatic trading. I have not done anything with this. And for full transparency, I'm gonna change. So this account right here is actually my main account, where I'm also copying signals from this one to other accounts. But I'm gonna change this because now, obviously, when I go to the next phase of the bootcamp account, I have to go into my copy trader and change all the loggings, right? So what I'm going to do is I'm instead, as soon as this hits it goes to phase 2, I'm going to change the algo account to the funded account. So the funded account will be my main signals account. And then the idea with that one is to trade with very low risk and scale it very, very slowly, so I don't have to change all the logins and everything. And everything. Wow, I look tired today. I am tired today. That, you know, you go on vacation, you come back, and you've never been this tired. That's kind of like what vacation does to you sometimes, right? It's like sometimes you feel like you need a vacation from the vacation. Let me zoom out a little bit here on all right, perfect. All right. Wow, that's nice. All right, $8 to scale up. Congratulations, man. Now, don't make anything stupid, right? Okay, so you guys saw I did a challenge where I was like $1 away from passing that evaluation, and then it went straight down after that, after the first dollar. I had $1 to passing the evaluation, and then I went back to like break even. So it's very easy to gonna get carried away, get a little bit too overconfident sometimes when everything's going well. Guys, let's go into the chart here. After you won the bootcamp trading camp challenge, now let's get into the chart here. Now, quick question here: how does the bot work? So it's an EA. It's a MetaTrader 5 EA. So coded several EAs. I currently have 7 different EAs running. The goal is to have 50 at the end of the year, and then the year after I want to have 100. So what I'm doing is I'm building a algo portfolio of. And I have a slightly different philosophy when creating algorithmic trading systems than others. A lot of people. Yeah, Omer says, please can you go to analyze gold? Stop talking, bro. You talk too much. I don't know what to feel about that one. Let's put that guy in timeout. You might be right though, but yeah, let's put him in timeout anyway. How long? Should we put him in timeout for 5 minutes, 10 minutes, 30 minutes, or 24 hours? Start with 10 minutes. Anyway, so I have a slightly different philosophy. I'm going to keep on talking. We're going to get to the live trading in just a whole. It's just in a little bit, all right? So I have a slightly different philosophy for that. I'm not looking for the holy grail of trading systems. I'm not looking for one EA that is going to be super profitable. I'm looking for many small edges, right? So you can have one. Imagine if you have one strategy that has a profit factor of 1.1. That's not very profitable. It's like, okay, you're just trading in and you're just almost at break even. But what if you have 100 systems that has a profit factor of 1.1? Now that is going to make a big difference. If you have systems that have just a tiny edge, very low drawdown, and just a tiny edge, and then you have hundreds of those that are not correlated to each other. Now that 1.1 profit factor might become a 3 or 4 profit factor when you combine it into one single portfolio and you look at the statistics of every portfolio together. That's my approach to algo trading. I'm not looking to find one strategy. I'm looking to find hundreds of strategies with a very tiny edge, and that's what we're moving towards here. Right, okay, so let's take a look at gold. We're currently looking at gold right here. What do you guys think? I haven't been looking at the market since, I believe, last Wednesday or so. And when was last Wednesday? Last Wednesday was the 23rd, so that's going to be around this high right here. So last time I looked at the market, we had a major breakout right here on gold. We broke above the 3,360-ish level. And what I'm watching right here is obviously we are trading back down below that level here on the daily, but we are still, in my opinion, in a somewhat of a bullish structure here. Let me just look at the weekly. We're gonna get to the lower time frames in just a bit. I just have to make sure that I understand the overall picture here on the weekly. So I'm still looking at this one as the last high time frame, higher swing low. Okay, so we go below that level, then the higher time frames are changing, right? We can also see that we have the weekly 20 EMA right here at that level. So we could now look at, just to simplify things, you aren't catching your language. Not sure what you mean by that. If you can't understand English, I can't help you with that. I don't know. We have not. I'm gonna look into seeing if I can add captions, like subtitles, to the live stream. But unfortunately I speak 2 languages, and I don't think you understand Swedish, so we'll have to keep it to English. Okay, so that's the last higher swing low right here. If we go below that one, we might change structure on the higher time frames. We can look at the 20 EMA right here. Simplify things. Okay, weekly, that's the weekly. We go down to the daily. On the daily right here, we see that we're hitting an important level, which is the area around 3,300 to 3,300 to 3,310-ish area. This is a good support level right now. I'm going to remove the EMAs because they're just sidelined here, just indicating that we are in a range, not really telling us a lot about the overall structure. We're going to be moving these lines right here. So the daily is, I would say, if you take the daily price action and then you combine it with the overall bullish structure on the high time frames, we could say that maybe we have a neutral structure that is, yeah, you know what, I have to do some more analysis to kind of make up my mind on what I'm seeing here. But if we draw a range here, could we perhaps look at this as a range? I think we can, and we would then have the range lows up here. So the range lows would be around 3,400, 3,450 perhaps, 3,440. I think it's a good level to look at range highs as the range EQ right here for gold. By the way, guys, welcome every new viewer. We're currently analyzing gold. If you just got into the live stream, I'm seeing that we're getting a lot of people watching right now. Make sure they go in and like the video. We got 145 people watching right now, and below 50 likes, which means that most of you are just tuning in for the analysis without liking the video. Remember, this is all free. But we're asking you for one simple thing, and that is just hitting that like. If you can hit that like, then that would mean the world to us. Remember, we're doing this for you guys. We're doing this. All the content here is for free. It's forever going to stay free as well. All we ask is you to love me. Hit the like. Okay, so got a good range EQ level right here. And then, of course, we got that range low. Okay, so on the daily, I would say that we're neutral, right? But we're below the range EQ level. And if you're gonna go long, on gold, you really want to go long here, right into range EQ, because we are below this level, which could mean that we are below resistance. So you're buying straight into resistance. But here's the magic with technical analysis. If you don't really know what you're doing, if you don't have a clear system to follow, I can probably, like, if I would put up a poll on this and I would ask you, are you bullish or bearish on gold based on this, then you would probably say, like, you would probably lean slightly to the bearish perspective. But here's the magic of technical analysis and the way we can kind of shape your view on this by just switching the levels just a little bit. Now, what if I do this? I'm just going to make it very simple. Just encapsulate all of yesterday's price action. Move it to the left. And there we go. Got another nice little support area right here. Let's make that a little bit shorter. Let's be a little bit tighter. Well, look at that. Now you look at this and you say, wow, I'm bullish on gold because it's right at that support. So with technical analysis, context is key. Okay, context is very, very important. Now, what I'm watching is I'm a little bit hesitant in going long here on gold because of the fact that we could potentially have resistance above as range EQ, but we can also be looking at this current move to the downside as hitting a support. And if we go down to the 4 hour, I'm going to show you what I mean here. Actually, on the 4 hour it becomes quite clear here. We have a bearish retest right here. We go down to the 1 hour. So we have a bearish retest right here. If we add the fibs here, looks like we're in the reload zone right now. Yeah, so we're hitting the, we've just hit the 0.618 of the short reload zone, and we're getting a wick here on the 1 hour candle. You can also see here that we did have yesterday, I guess this move to the downside was potentially followed by, not sure what happened here, because this was around the US Open. Maybe it has something to do with the US EU trade deal over the weekend. Again, I haven't really looked into all of this. I'm not really sure what happened during that time. But what we do see that we have a strong move to the downside. We broke an important support right here for gold, and we're now retesting that level right now. Looking at the 15-minute right here, that is a nice rounded rejection with a very good retest level right here. That is an untested breakout level to the downside here on gold. So now there is, of course, a possibility of seeing this level acting as resistance. And you can look at the price action within that white circle that we're clearly rejecting that level. But there's some indecision here, right? There's definitely some indecision in price action where we're creating this range up here. The reaction isn't initially, it's not an initial strong bearish reaction, which tells me that even though it's a good level, there's some indecision here. And now to that, you also add the overall bullish structure on the higher time frames. The question then becomes, are we going long or are we going short? Now, the question doesn't have to be, are we going long or short? The question can be, okay, so what's your bias? Are you biased to the upside or the downside? Now, if you're biased to the upside, then you might instead ask yourself, when can I go long? And I think that's where I'm at right now with gold. I wanna ask myself, when can I go long? Because I'm not ready to short gold. That I don't feel like I have a good enough reason to short gold. Is this rejection at this level? Is that a good enough reason to go long, short on gold? I don't think so. But I'm also not ready to go long. But I would be ready to go long if we perhaps break this current bearish trend that we got right here. You get sort of a trend line here. Breaking about that trend line right now, but you also have that resistance zone. So what I want to see from gold is something like this for me to go long. And then what we can do is we can target the 0.618 short reload zone. And the 0.618 aligns quite nicely with that level as well. So I think for me, this would probably be a better option for gold. So I'm going to put in some alerts here. This might actually happen throughout the day. And if it does happen throughout the day, we're going to be covering this and going to make sure that we do have a trade coming in. River says, hi, Jonatan, I see more and more platform proposing instant funded accounts. Is that something that we can expect from the Fivers in the near future? So we do have the hyper growth account, which is sort of instant funded. You go through only one step, and then I believe. But it's not like we're not giving you a funded account. Like you pay and then you immediately get a funded account. And do we have any plans of just giving away accounts without any evaluation at all? I don't like, I can't really comment on that because I don't know if there's any plans like that, if I'm gonna be honest. But I don't think so. Like I don't think so. But I don't know anything about that. What's up, Louis? Welcome. What's up, Louis? Sue is you're bullish to the upside. You're bullish to the upside. I mean, you're biased. You're bullishly biased to the upside on gold, but you're waiting for a breakout through resistance and retracement back. I think we're looking at something similar. Same idea here as well. What's up, Kelly? Hope you're doing good. Welcome to the live stream. Yeah, Vinicius saying that it's like, Jonatan, you can have 50% of the first target. For me, it works like a funded account, but the certification only comes after phase 1. Yeah, so you're gonna get like, when you pass that first phase, you're gonna be able to get some payouts. It's almost like an instant funded account. Okay, kind of is. Right, so that's gold. What else are we looking at right here? And what I'm looking at is the like numbers, and the like numbers are going up, and I really do appreciate that. Thank you very much for that. Let's get that like number up to Pete says, what days are 5 years still doing a live stream? We don't have any. Yeah, okay, so we're doing Monday, Tuesday, Wednesday, Thursday. Monday, Tuesday, Wednesday, Thursday from in UK time, that would be, well, not UK time, but in GMT time, which is it UK time? I think UK is GMT plus 1. Anyway, in GMT it's 8:30. We're starting 8:30 and then we're ending it at the 2 GMT. All right. Okay. So that's gold. What else are we looking at? We're seeing gold is rejecting here to the downside. I think for gold, we're probably looking at a move down to the 3,320 to 3,321 area. This level marked out right here. Gonna put a little circle on here so you get exactly what level I'm talking about. It's gonna be that level right here. That's where I think this move to the downside might come in. And of course, if there's a lot of bullish momentum here, I mean, for the bulls, I'd like to see a bounce here, because if we do get a bounce right there, that means that there's a lot of bullish momentum right here, and buyers are stepping in at the very first opportunity for that the very first opportunity to buy. And of course, we also have the 50% level right down here, and confluent with the area around that breakout area as well. So that's a good confluence area for gold. Will I buy down there? No, I'm not looking to buy. I want to get that confirmation with a break to the upside as well. We'll get another question on the EAs. Do you do EA yourself, or do you give someone an idea and they do it for you? If someone does it for you, can you recommend a developer? I have different developers I'm working with. They're working for me and they're employed by me, so I can't obviously recommend them to you, because that would mean that you're taking my employees, which would not be a good business decision from me. But yeah, I do have several developers working for me to develop these EAs with instruction from me. I also have different softwares and applications that I'm using to quite a big machine running doing all of this. It's not easy, it's not cheap. One of the software I'm using to develop this is costing, you know, more than $3,000 for just one of the softwares, and then, you know, I've spent a lot of money developing. Right now I'm working on actually all right, so gold is testing the level right now, by the way, the level that we talked about. We want to see a bounce down here. So what I'm working on right now is like an in-house, almost like a dashboard where all the signals from the EAs are going to be delivered via webhook to a specific dashboard where I'm going to be able to follow the equity curve of the whole portfolio, but also the equity curve of every individual strategies. And I'm going to try to also do automatic technical analysis on it, so just adding a moving average and see if any of the strategies are diverting from the backtested results. I'm going to get an alert telling me that this algo might not be performing as it should, because if it's if it's exceeding the drawdown that I saw in backtesting, that means that live trading is not the same as backtesting, and then I might have to adjust that one and just throw it out, you know. And but the strategies are quite advanced. I mean, it's tested with over 20 years of backtested data. It's used in Monte Carlo simulations to confirm that it's going to be profitable with tweaking parameters as well, doing walk forward testing and random samples and all of that. So it takes some time, but definitely creates quite a lot of robust strategies. Okay, so we got gold right here, hitting that level right here. Do we want to open up a trade on gold here? I'm not sure that we want to do that. Probably want to wait. I feel like I want to wait for gold to find the bottom here and then move higher, because we might just move lower. You know, if you look at the 4 hour, this is a pretty decent rejection here at resistance, and we might move lower. And if we break down completely, obviously testing the local lows right here at around 3,312 makes sense, but then, you know, we drop lower, 3,260, the level marked with a number 1 here might come into play. Millennium Management says that I have created more than 300 EA and indicators free with Chat GPT. I'm not sure what Chat GPT is and Grok, but yeah, it's I've gone down this route as well. That's it's not how I create my EAs, and I feel like Grok is definitely not good at creating trading EAs, trading strategies. ChatGPT is decent, but you're not going to be able to backtest them extensively. You're not going to be able to run all the advanced backtest and robustness testing in ChatGPT. You need to have custom Python scripts and softwares to do that for you. It's an immense, it's a very, it takes a lot of energy and a lot of time and a lot of computer resources to do the testing. So for example, when I run extensive robustness testing on some of my strategies, going through, like, let's say hundreds of different strategies, it's going to take about a week, or fastest would be like 3 days of having a server running 24/7. Now that server has, I think, 72 cores. The CPU has 72 cores. It got 260 RAM memory, so it's a very fast computer, and it takes like 3 or 4 days to do the robustness testing on those strategies. And most of the time, none of the strategies are going to pass robustness tests, but eventually, like every millionth of a strategy will pass the robustness testing. So I've tested and generated, I think, 50 million different strategies using large language models and very powerful servers. And from those 50 millions, and it's taken months, many months, 50 million strategies, tested them, and found about 5 to 7 profitable ones. So you need a lot of time, you need a lot of resources, and you need to know what you're doing to kind of develop the systems that the way I'm developing, which is kind of like a mix between manual instructions to coder and just brute force. Okay, so gold did bounce here on 3,322, exactly where we wanted it to bounce if there's bullish momentum. So now the fact that we're testing that level and we're bouncing on that level tells us that the bulls are stepping in at the very first opportunity to do so. Now, if we can break higher, break above this overall area right here, because you can see right now we've got another bearish retest right here. So on the 4 hour, we have a bearish retest of this level, but then if we go down to the 1 minute, you see that we have another bearish retest of that level. So the first step for the bulls to take control here for gold would be to get about 3,325. Okay. Millennium Management is asking 5 to 7 are profitable with how much account drawdown and what risk you use on each trade and how much profit results they show. So the max drawdown are different between every individual strategy, and the risk per trade is also different for every individual strategy. So the risk per trade is based on the max drawdown on the individual strategy. So I can't really give you a proper number on that. Right, trying to see if we can get a push it upside. If gold breaks below 3,322, we might have a move lower. All right, let's see if we can get here on gold. We're almost at 100 likes. Make sure you hit that like, and let's get the like numbers up, and let's get some more people in here. We're currently looking at gold for everyone just joining. We're currently looking at gold. Let me know if you do have any short requests or any request in the comment section. What's up, South Africa? Welcome to the live stream. Hope you're doing good. Happy to have you here. What minimum risk to reward do you always trade? I don't really look too much on risk to reward. Like I'd like to have a above 1 on risk to reward, but for me, it's not really about the risk to reward. It's about the probability of price moving from one level to the other. If by looking at your statistics, you see that the probability of price having a reaction on, so we could look at, for example, I can't remember what pair I looked at, but I think it was Euro NCD or USD JPY. But I saw that when you had a break and retest on a 4 hour in an overall uptrend, and it's the first retest of an untested breakout level, and that level is untested on all time frames. So what I mean is from the 4 hour all the way down to the 1 hour, and you have like a confirmed rounded retest, the probability of having an initial bounce on that level is very, very high, like above 80%, or at least above 75%. So if you have a 75% chance of if price has a 75% chance of moving, I don't know, 10 or 20 pips, you're going to take that trade, right? But if you have a rule of setting your stop loss below the breakout level or something like that, and you see that 10 to 20 pips, that would be a negative risk to reward. Would you take that trade? If you know the probability, according to statistics, is 75% of moving, let's say 10 pips. But to have a decent stop loss based on technicals, you'll have to risk 20 or maybe even 30 pips if the trade goes against you. Now, would you take that trade? To me, of course, I would take that trade. If you have a 75% chance of winning that trade, I'm going to take the trade. And I'm going to take the trade from a level-to-level perspective. So let's say we look at this trade right here. Now, what is the probability of having a reaction at this level? I think having a reaction at this level is fairly high. It's also fairly high to have a reaction at this level. But this is an untested breakout level all the way down to the 1 minute. The chance of having a reaction at this level for a pair like gold, I would say is fairly high. Now, I don't have the statistic on it, but I would say it's above 50. It's definitely above 50, and it's probably higher than this. You could look at this example as well. Here's somewhat of an untested breakout level, not really untested, but still a solid support. The first retest of that level right here, there's a fairly good chance that you're going to get a reaction. But if you're going to get a good reaction on this, where would you place your stop loss? If you're going to put in limit orders, you're going to say like, okay, so I want to buy that level. I'm going to take profit here, but where should I have my stop loss? Like, I can't put my stop loss here because it's a limit order and we don't know how far price is going to go down. Can we place our stop loss here? Yeah, sure, but maybe price is going to go down and wick that level. So what if we place a stop loss down here? Now, this is a negative risk to reward trade. It's 0.4, okay? In this case, I'm just going to have the stop loss down here as a fail measure, like a way to really make sure that I'm not, if prices go straight down here, I'm not going to lose, way too much. But the probability of making money on a trade like this is, in my opinion, so high that it makes sense to be trading with a negative risk to reward. Now, we might also see that there's a high chance of having a reaction here. So if we break below that level and we're using limit orders, we might place a limit order here. I place a limit order here on, why am I not choosing the right tool? Long position. Okay, so that would be the limit order. That would be the level. Now, where would we TP? Probably up here, same level, right? Probably up here, or maybe this level. And where would we have our stop loss? Well, stop loss is going to be all the way down here. That's a negative risk to reward as well. But the probability is so much higher. And a lot of people, they are so fixated on risk to reward, they're going to place their stop loss here. And they're going to be like, wow, it's a high probability level and it's a 2.6 odd trade. Well, what's going to happen? What do you think was going to happen? Probably something like this. Okay? So giving the trade more room for error gives you a lower risk to reward, but a higher chance of that trade actually working out. Because especially for gold, you're going to see gold really overreacting and either front running a level or completely overshooting a level, and very seldom is going to be exact. So especially when trading gold, I will be looking at a lower risk to reward. Look at the high probability levels, like an untested support level, a support level that has not been tested for a long time, but it's been a very good resistance in the past, and then you're retesting that support level for the first time. The chance of having an initial small reaction is very high. Now, I'm talking about an initial small reaction, and we're talking about just a small move, like we see here on the 1 minute. So it's almost like scalping, but you're scalping with almost like a swing trader's mentality or an intraday trader's mentality, where you're happy to let the trade run. Okay, so that's gold for now. We're gonna get back to gold. By the way, guys, make sure that you do hit that like. Highly appreciate if you do hit that like. Now, I know that I keep asking you about that like all the time, but man, it is so effective. Whenever I do ask about it, it's the like number do go up, and it really does help us and the live stream quite a lot. Right. Okay. So let's look at the Euro USD. We have a request on Euro USD, so we're gonna switch over to Euro USD. Let's look at this one right here. Quickly going over the news as well. Let's see, what news events do we have right now? Today we do have okay, so we can see to the right of us, we have JOLTS job opening. We had CPI for the UK, CPI year to year to the UK. Okay, so CPI for the UK coming up in, that's a bit too quick on that one. We got, well, okay, we're going to be waiting. I'm looking at the economic events that we have here on the live stream to the right of us. Let's see, it switches every 5 seconds. I got to be very quick. Okay, we got no news, no high impact news that is happening right now. Okay, so we got JOLTS job opening in 4 hours 38 minutes. We got CPI coming out on the UK in 16 hours. Okay, no, that's Australia. That's not UK. That's Australia. Wow. The difference between the Australian flag and the UK flag, that's a bit embarrassing. But yeah, we got JOLTS job opening in by the way, I like that widget. It's really cool. That widget was created by Mike. Coded it himself. It's actually quite amazing. Right, so at 4 p.m. my time, we have US JOLTS job openings. That could be a significant catalyst. This morning, I closed my trade on Euro USD. Let me explain why I closed. I took some small profits, but I think it ended up being more of a break-even trade, actually, than a profitable trade. But we are looking at Euro USD right here. The fact that the reason why I closed Euro USD was because it broke this low. So when I entered the trade, this was my invalidation. Okay, you can see the stop loss down here. But then price moved higher, hit the local resistance right here, and now created a lower high, and it broke the local low right here. And now I said, okay, this is no longer the trade that I want to be in. It's not looking super bullish here, not looking super powerful. I'm going to be waiting for another opportunity to get in. Am I in on anything else? Yes, I closed. Yes, that's right. I closed AUD USD as well, around break even. So a small loss, I believe, on Euro USD, and AUD USD has closed at break even. It almost hit that profit target up here, but then went all the way down into my entry area. I would have wanted to see a break above range highs here and hit that TP, but unfortunately, I missed that one because I was not watching the market at the end of last week. We have a question regarding what I talked about with the stability score. Did you answer my question on where you check stability score? Because I was away from. Okay, so no, I did not answer your question. So actually, I'm actually not really ready to share the softwares that I'm using. I want to make sure that I'm not sharing too much of my process, because I do feel like some of the softwares and some of the processes that I use is still somewhat unknown, and some people know about it, but not everyone. And there's also a high barrier to entry, because you get to pay a lot to access it. But I feel like there's an immense edge in what I'm doing here, and I feel like in a couple of years it's going to be available to the general public, to everyone. I feel like if I'm giving everything away, it's going to take some of that edge away, because I truly believe that it's extremely powerful, and in a couple of years, everyone's going to know about it. And by that time, I want to make sure that I have a profitable portfolio, or it gets unprofitable to use it. So, but what I would recommend is, and I'm going to give you a little hint. Stability score can be found and calculated using a custom Python script. You can hire a coder, ask him or her to write you a custom Python script to analyze trading data. So you can look at, take the trading data, export it, let the Python script analyze it, and calculate the stability of the equity curve based on the trading data, entry, exit, profit, loss, drawdown, etc. Basically, you want to create an equity graph, and then you want to analyze that equity graph. Okay, so that's AUD/USD, not in that one. I kind of like it though, but I feel like, we looked at AUD/USD for a possible move up to that 0.618, and it feel like it hit that level now. It has hit that level now. It front ran it, but still hitting that level. So not interested in AUD/USD long now. It's basically the move is already gone. Okay, gold. You guys want me to take a look at gold? We got a lot of people watching, a lot of people coming in here, new people, and we want to make sure that we make everyone happy. So let's take another quick look at the gold right here. I will take a look at the gold, and you will hit the like. Thank you very much. Let's take a quick another look at gold right here. Let's pop over to the gold chart. Where do we have that one? We got it right here. Looking at the 1 minute for gold, we have another move to the downside and another nice reaction inside this area. Good stuff. Okay, so now what I'm seeing, this looks good. We got the initial reaction right here. Good wick on that 5-minute candle. Good wick on that 5-minute candle here as well. Somewhat of a bullish pin bar candle there, if you will. And it might also have hit the 50% fib. Right, it almost exactly on the 50% fib right there, which is a very good sign. Now let's see if gold can get above this level right here. If we can get above this level, which is the 3,325 area, if we can get above this level, then I would think that there is a possibility at least of getting that move to the above the level, which is a move above, I would say, 3,330. So what we're looking at here on the 1 hour is a initial bearish reaction on the break and retest of this level right here. We found it on the 4 hour. As you can see here, we find this bearish retest on the 4 hour. By zooming in, we see that we got some interesting price action here on the lower time frames as well. We are now above that level. We're confirming a reclaim of that level on a 1 minute closing basis. Will I take a trade here on gold? Maybe we could take somewhat of a... Let's see, do I have access to that? No, I'm too lazy. I haven't figured that one out. As you guys know, I'm logged into my laptop, but I'm not logged into... I should definitely... Okay, so never mind. That scalp trade is gone now anyway. Okay, so we are now seeing a move higher. For those of you looking for a trade on gold, of course, this is not financial advice. If you're looking for financial advice, do not look at me. I'm not a financial advisor. Go call up your bank. Say I'm about to buy gold on leverage. They're going to say you're crazy. Don't do that. So maybe not. But you know what? Like if you're looking for a trade, okay, so let me phrase it differently. If I were to look for a scalp trade on gold, this level looks very interesting. Get a 1-to-1 risk to reward here. And I would actually say that we might actually have a fairly highly probable 1-to-1 risk to reward right here on gold. If you're bullish on gold, I think this might be a possible entry. But now we're breaking down. Okay, so now if you haven't entered, if I haven't entered, but if I would look to enter here, I would probably look for just some minor confirmation here, right? Just A bullish 1 minute candle, right? Just a bullish 1 minute candle here. So the candle is going to close in 5 minutes, 5 seconds. I mean, the 1 minute candle closing in 5 seconds. If the next candle would be bullish and closing above the level, at least it's showing us some sign of this level now being reclaimed as support. So let's see what we get. If we go straight down to the downside, not going to be very interesting. We see the bullish candle coming in right now. We got about 50 seconds before this candle closes. If this is going to close like a bullish candle, then that might mean that we're in for a breakout. But still, 1-to-1 trade here on gold. I think that's definitely interesting. What's up, Void? Hope you're doing good. We got Void in the comment section. What about the top fans? Do we have any top fans? We do, but there's no one that I don't know anyone in the top 3. Or you got Michael though. I got Michael, the regular fan of ours. You gotta step it up, guys. The regulars here, you gotta step it up. Step it up. Okay, so that's it. That's the confirmation, right? Now, if you're like one of those super tight stop loss people, then obviously something like this might be something that you're looking for. Oh, that's a short. What am I doing? Right, so that's the bullish candle, and then that's probably, I still think it looks decent for like a 1-to-1 something like that. All right, let's go. We're trading gold, we're trading live. If you like what you're seeing, hit the like and subscribe to the channel. We're also doing a giveaway right here, so I'm going to be posting the giveaway. I am going to post a giveaway link. I'm so bad at multitasking. Like, I am so incredibly bad at multitasking. I'm getting a message. I'm like, oh, I gotta read the message. And then I'm like, what am I talking about? Am I doing a live stream or what? And then I'm like, yep, you're live. You're on YouTube. You got hundreds of people watching you. Maybe try to focus on your job. Yes, that's what I'm gonna do, Jonatan. Thank you for the advice. I'm gonna focus on my job. What am I doing? I'm trading gold. That's right. Snap back to reality. I'm trading gold live on YouTube. What's up, man? Welcome to the live stream. Happy to have you here. Super happy to have you all here from all over the world, all different time zones. Some of you it's morning, some of you it's night, some of you don't even know what time of day it is, which is okay, can you guys hear me? Sometimes my microphone just stops working. I don't know why, but it just says your device is disconnected. You're trading, you're making too much money. You're trading gold. The market makers are cutting you off. You can't be giving these signals away. People are making too much money. I'm making too much money. I'm actually not making any money. I'm not even in this trade. But if I would be, I would actually be losing money. Oh, there we go. So this is it. I like that. So that's a risky buy right now. Get a comment. That's a risky buy right now. Every buy is. I did no, obviously not. This is not a risky buy. Like I told you guys, if you get this 1 minute candle right here closing as a bullish candle, that would confirm that this low time frame level is acting as support after getting a nice 5 minute bullish pin bar right here. We have a W structure on the 1 minute. We have a retest of an untested breakout level. This is some good stuff right here. Good stuff right here. Should be able to get a 1-to-1 trade in on gold right here. Annick says, "Why low risk to reward?" Yo, man, I can make it higher. I can do this. I can do that. 13R just for you. But I would be stopped out on that one. The reason why I got low risk to reward is because it's gold. Okay, so again, I tried to explain earlier, I'm not trading risk to reward, I'm trading level to level, and sometimes the invalidation of the trade is going to mean that it's going to be a negative risk reward. Sometimes it's going to be 2, sometimes it's going to be 3, but all I'm looking for is, okay, so what's the probability of price moving from this level to that level, And if it's, if I feel like if it's, an untested breakout level, it's a buy in an overall uptrend. If it looks like everything looks good from a technical standpoint, why would you not take a trade? If it's a high probability of a bounce, why would you not take that trade? Because it has lower risk to reward. I mean, you have to think about, when you're thinking about the relationship between win rate and risk to reward, you can't just think about that specific trade. You have to think about your portfolio, and you have to think about your whole trading journal. Like, look at your trading journal, and then you look at your average win rate and your average risk to reward. That's where you can start thinking about optimizing your risk to reward on an individual basis. So just saying that, okay, I'm only going to take trades above 2R because I have this win rate, doesn't make a lot of sense, because some trades have higher probability than others. So you need to learn to identify what the probability of that specific setup that you're taking is. Now, of course, if you're trading just one very specific setup, and you know that very specific setup has a 50% win rate, then obviously you need to have above 1% risk to reward for that to work out. But I'm more interested to know, like, what's the averages.
Good morning, Jonatan.
How's it going?
How good. How are you?
I'm good, man. I'm good. Happy to have you here.
Yeah. What's up, everyone?
Are you rich? Are you rich yet? I mean, I asked you last week and you said no. How about now?
Not yet. Not yet. I think maybe I would have a higher success to become rich if I maybe move to Asian session, like to, I don't know, Australia or Japan or something like that. Many of the moves are happening overnight.
Yeah, that sucks. You sucks that you find the system, and then it's like, wait a minute, it's all the good trades are when I'm sleeping.
Yeah, exactly.
Yeah.
So you are in a trade on gold. That's kind of what we can see.
No, actually, I'm not in this trade. I'm just following along a trade setup here. I actually didn't take the trade, but
okay.
Yeah, just looked at a trade idea. I haven't entered this trade. It felt like not my trade, but definitely interesting.
Yeah, my trade from last week on gold, it reached a target, so I was saving all the way from the top. It reached a target even on Friday, so on Friday I was already out of the trade, and now we'll see what will happen on gold. I think you can have a bounce. I think the move last week, it was quite aggressive, so now I think the buyers are going to jump into it a little bit, and maybe you are going to range for a while now. I think we may have a little bit of a bounce. Well, this week's going to be massive, right? So maybe we're not going to be ranging for that long. We're going to have many news, plenty of news. It's going to be one of those busiest weeks of the year in terms of news events. So,
yeah, we had I was a bit surprised, by the price action we saw yesterday, because we had the deal between the US and the EU. I mean, initially, I read some about it, and initially I got the feeling that the EU was not really easy to negotiate with, and it's, first of all, it looked like you would have, I mean, okay, let's be honest, I think it's Trump is not easy to negotiate with, but he's saying that the EU is not easy to negotiate with, right? And it kind of looked like they were moving towards the, a blanket 30% tariff or on everything, but now it's down to 15, which I feel is lower than 30, but 15 is still higher than 10. He talked about 10 being a good level for most countries, and now it's at 15 for EU. And the market reacted quite bearishly to that, and and gold really started rallying. We can see here on gold on the daily, and we are pulling back today, but
that's not very nice.
Yeah, the reaction yesterday, do you think that had to do, because we had earnings seasons, that right now we get a lot of companies coming up with earnings and all of that? But do you think this dollar move had more to do with the US EU deal?
Yeah, I think so. It was I think maybe it was even more about the euro deal than I think the move on the dollar it was because of the euro, not because of the dollar itself. Because yes, it looks like Trump got what he wanted. Because aside from the 15%, there was also deals to agreements to purchase or to like billions of dollars. I think it was some kind of energy or some other material.
Yeah, I think 750 billion.
Yeah.
Yeah, that's a lot of money. 750 billion in energy, and then 600 billion in other investments. So yeah, it's a lot of money. But actually, I think that was less. Wasn't it less than what Japan wanted to invest? I'm gonna look that up because Japan, they had a deal, right? I remember reading the details of that. And Trump's like, oh, we get a very good deal. We get a very good deal with Japan, and everyone's happy. And then I read the deal, and I'm like, Japan is giving you US lots. They're not getting anything back. Like they didn't really get much back. It's just that Japan is just investing tons into the US. But what are they getting? It's just, it's not sure if it's a good deal. For the US, it's a great deal.
Yeah, that's the thing. I think Trump is in the end. I think he's getting a lot of what he wanted in the beginning of when it all started, and that's what we are having. So that the deal with Japan was last week with Eurozone. Unfortunately, it was Sunday night, so on Monday morning or overnight, price just crashed, and now we'll see. But yeah, in addition to that, so it's going to be until the 1st of August. I don't know exactly what country is missing at this point, like a major country that is missing, maybe China, to see if there's more negotiations in there or not. But China is a different beast. But then we do have earnings, as you mentioned. So on Wednesday and Thursday, you're going to have the big 4 of the big 7. So we are going to have Microsoft, we're going to have Meta. Then on Thursday, we're going to have Apple and Amazon. So that's, especially for someone that's trading the US indices, that's going to be an important one. But we have the FOMC, as you know, tomorrow. We have also Bank of Canada. Then on Thursday, you have the Bank of Japan. And because it's already the first week of August, at least on Friday, we're going to have also NFP. So it's going to be really massive. It's one of those weeks full of red news events. And it's going to be interesting to see what kind of volatility, if you are going to just stay stuck within the same range, or if you're going to start getting into new price levels. Even on the dollar, for example, if you're going to go up from here or by any chance going down, it's going to be interesting to see what will happen.
Yeah, we have a comment here from Timothy. How was your not CMAT? I think you meant CMT. I'm still waiting for the score. The score is so this score, I believe, is going to be sent out 5 weeks after the testing window is completed. And my testing window, I took the test when the window opened, and I believe it's I'll get the results at beginning of August. So maybe like first week of August or something like that. So pretty close. Hopefully, like I really do hope that I'm gonna pass it, because I've spent a lot of time, a lot of effort, and a lot of energy on it. And I got about 2 years left of studying to get the title, which if I'm past this one, I'm probably going to be like 40 when I get the title. And I feel like, I want to retire. I don't want to get the title in time for retirement,
Dead at 40. Fantastic.
Yeah. We'll see. Yeah. Pedro, I want to see you short. Let's pull
I'm going to bring it. I'm going to bring this one.
Nice. Like that. Looks good, man. Is that what is that?
Yeah, that's it. That's
that's all we need to know.
Is it
up arrow?
No, remove.
No, okay. So okay, you're right. We're gonna go in, and I'm gonna change. Wait a minute. I'm gonna change it for you.
This is my scene, I believe.
Yeah, I know. I'm gonna change it for you.
Yeah, this is private, guys. So sorry. This is my AI. Okay, now everyone can have access to it. Yeah. So someone asked me about gold. I believe it was Steven But anyway, Steven, I would like to know your idea as well, what you are looking at gold. So this was a trade from last week. I explained that with Diana when I was here on Thursday. And actually I was looking for price eventually to get there. As a more conservative, I end up closing just on the test of this level. But what I was expecting actually some reaction from gold. It was now towards more of this zone in here, where price actually ended up reacting this morning. It was yesterday already. Yesterday. And now we may bounce. We may create some kind of a range. First of all, we need to pay attention to see if price eventually breaks above this high or not. If price starts breaking above this level, maybe we can have a little bit more of a move to the upside. And maybe this low is actually going to hold a little bit more price and maybe have something like that. If this one keeps holding and price starts moving down, then maybe we can start going even further down. So now it's a little bit of waiting and see. I had this clear level that I was expecting price to react from, and I still have this level that can still hold price down. So within this level, just basically what's happening today, you may have some opportunities. Price has been respecting these demands in here quite nicely, and maybe at least maybe closer to this level, price can move towards to. Yeah, so this is more intraday. I'm not going to be interested in anything in here at this point. I'm going to be waiting to see what gold we do, and if you do have like my idea, maybe if I was still looking for a short, I would like to see maybe price actually confirm that it wants to break some of these lows, or and then manipulate something to go, or maybe just create something like this, fake out, come back into this, and then try to push down. Something like that. It may be something that I would like to look for a short. But now we are back into, I'm not really sure what to expect on gold. Trade windy this level, and then we'll see. Yeah, bigger picture, I would love it to go down here to 3,200. But when that's going to happen, I don't know. Yeah. But what are you guys looking at gold? Tiago is asking for KDN. It's been a while since I looked at KDN.
You're basically bearish on gold, are you?
I was bearish when I sold it at the top, but now price is back at this level of support, which level we can find buyers. So yeah, I don't know now. I don't know. I need to see these lows being broken to start pushing then price towards 3,200. And I need to see that happening. Martina is mentioning looking for scalps on gold. Yeah, let's just take a quite quick at that Guardian, because it has been a pair I haven't looked for ages. What can I look in here? Tiago, what are you looking for on Guardian? It's always easier if you guys let us know if you're looking for long, shorts. What are you looking at? Yeah, price actually broke this low. Full mass is a full compression in here. What are you looking at? At this level, price respected, maybe that one as well. Maybe looking for price to go slightly above here. Okay, I'll be looking. I would like to see at least price breaking below this level, even though we start breaking some walls in here. But this may be the key zone that matters. And then you're approaching this one in there. So I would like maybe to go a little bit higher before looking for a short, or a little bit more of confirmation of price actually turning. Higher time frame, especially 4 hours time frame or daily time frame. Yeah, I would like maybe price to push a bit higher still. And then eventually maybe after taking this stop, maybe could have some selling pressure. Yeah, I think I would like that. You're looking for longs? Where from? Where from are you looking for longs? Yeah, I would like it to go higher, to be honest. I think I would like it to go a little bit higher and towards maybe something in here. Or at least above this top. And then maybe we can start looking for, it could start looking for sales. The question is, in the bigger picture, where are we? Yeah, I don't know if price is ready to go all the way there. That's weekly time frame. That's we're not going to look at the trade for next month or so, something like that. Yeah, they were still bullish. Yeah. What's up? What's up, Enrique? Henry mentioning, what is it? Looking for the Varka to break down and retest before shorting. Change of current in 1 hour, TP. Yeah, Tiago, I think you are still bullish. I'm just not sure where to look for longs in here. Are you going to wait for the retest back to these lows in here before pushing higher? Yeah, I think somewhere in here could have been a good reaction when price was close to these lows. Now price already moved half the way through. Maybe can have a continuation if you do break above this level. Maybe can have a little bit of a continuation to the upside. Yeah, it depends.
Yeah, I think it looks good. You know, a break above the local highs there could take you to. I think yeah, I like that, and then up to that resistance you marked.
Yeah, I think that could happen. It's one of the. This is not an easy pair to trade. Right? The way it moves, it's ups and downs, ups and downs, ups and downs. So it's not exactly an easy pair to
remember
trade.
It was quite easy like a couple of years ago. It had really good trends, but now the dynamic with the Bank of Japan and everything is just very different.
Yeah. Yeah, you can take a look at dollar CAD as well. What is we looking for? A breakdown and retest 137 before shorting. You're trying to look for a short. 3.7, 320. Yeah, so basically we are looking to break this low, I believe. Let's go 1 hour. Yeah, we're trying to see if price breaks this low to look for a short. Change of character, Davis symmetry, triangle. Okay. I'm a bit bullish on dollar CAD. I think price has the potential to go even higher than this top eventually. Of course, you may have a bounce, and dollar CAD sometimes does go up and down in swings like this. But the way price has been respecting these extremes and slightly breaking a little bit of a few structures in here, I think we can push a little bit more to the upside, and we are still reacting from this massive weekly or daily level in there on the left side. So this may be kind of a little bit more of accumulation before going into, I don't know, even can even go much higher than that. But I can see what you're thinking in terms of if price actually breaks below this level, it might shift a little bit the momentum right now. But bigger picture, I think I'm still bullish. I did not manage to catch the long in here, unfortunately. Price reversed just too quickly, and I didn't manage to get in. But now I think I'm still bullish. It also depends on the dollar, right? The dollar is going to be a big factor. Even though we do have interest rate decision, well, on Wednesday we're actually going to have interest rate decision on Canada and then in the US. So we expect a lot of volatility tomorrow on dollar CAD. But I think the dollar is going to be a big clue. If the dollar actually wants to explode and go higher, then I think that's going to be reflected across all the dollar pairs. Dollar CAD may go higher, dollar yen may go higher as well. So that's going to be an interesting one to look at.
If we get some interesting moves on gold. Let me just switch over quickly to gold here. And by the way, make sure that you do hit that like. I do see that we have 260 people watching, but below 150 likes, which means that not all of you are hitting that like. So make sure that you do hit that like while you're watching. So we looked at a couple of possible trade ideas with gold, holding this level as support, and as we see right now, we get another nice push to the upside right here on gold, and I think we're gonna get that push to the upside. We can see here that the idea for a TP up here. It might have been front run, because if you add that level, you see that the level was actually hit without hitting the planned TP right there. But still, get a nice move on gold. Again, what I'm looking at here for gold is more of a move like this, where I want to see that breakout and then go long on the retest of the breakout area. But on the lower time frames, it is looking quite bullish, I think, for gold. What resistance level do you have on gold? If you would look at gold, where would you say that you have the closest resistance? Because what I'm looking at here is sort of like the level around 3,328-ish area would be a resistance that I would want to see price get above. What do you think?
Yeah, I think it's about yesterday's candle. So I think yesterday's price action it was around this level, which is basically this 3,340 or something like that, or 3,330. It's similar to yours. I think we are looking to also to break kind of this level in here to see if price actually goes to the upside. So I'll be paying attention to that as well. I think this is going to be an important level. I'm not sure if price breaks and goes straight away. We may bounce around here. You can see on the left side of how many times price kind of just range in between these levels. So we may go back into that same structure. Again, tomorrow is going to be a big day, so who knows if we just get some volatility in price just either goes up straight away or goes down. But this is a level that I'm paying attention as well. Yeah, that was actually a good short yesterday for whoever managed to catch that move. I know a few guys that actually managed to catch this move on gold as a short. On the other side, I know some people that got a loss on gold because they may have seen this break of a top in here intraday, and they thought it was a kind of a change of character or something like that, and they were looking for a move like this. But yeah, it was more to the downside in this case. Yeah, so we'll see on gold. Honestly, I think price can go at least to this 3,330. So yeah, I think it could go there, and then we'll see what will happen.
Yeah, I think 3,330 is also part of that resistance zone. So for me, getting above 3,330, I'd definitely be bullish on gold.
Yeah. And then silver also made an interesting move. So unfortunately, never really managed to catch any of these shorts. But we had that initial short a couple of weeks ago when price kind of exploded completely to the upside, reacted from around this 39 level. And then I think we talked about this one, both of us on the live stream. Price just retest all the way back to the previous level support resistance. And I did mention that I was still expecting silver to continue to push higher, at least to go and play around this top. And we did that move, right? So price actually hold this level of support, which was previous resistance, and we moved to the upside. And again, price on the left side is still at an interesting level, so we're approaching this basically supply. No, it's not even there; it's even underneath there. Overall, this level it's an important one, and I was expecting as price continues to go higher to continue to find a little bit of selling pressure. And we did it. I didn't really manage to catch this move. Unfortunately, I was waiting for a little bit more of a separation before the move down. So what I usually like to see when we have this is a clear compression move, like what I usually call compression. Basically, price going up and down, up and down, up and down, up and down, up and down. Basically, every single supply, every single demand zone is being taken as price is moving up. So there's no surprise that then you have a strong move like this. But when I do look for that, I like to see the top. I like to see a little bit of momentum upwards, and then the rejection. In this case, that didn't really happen. It was kind of a rejection almost immediately, without that leg up. So I didn't really manage to catch that move to the downside. I was looking for it, and then this is one that I need to work more on. This one, this is a clear pattern that I look for, but it's not exactly a trade that I take. Many people do that. This is kind of more of a second zone type of a move that I call it. Zone 1, it will be the top or the bottom, and the second one is more of a continuation where usually you catch this big momentum. And in this case, we had the break already of structure. We had a little bit of manipulation, and somewhere in here to have been a great trigger after price breaks this structure again. So this, if someone caught it, it was perfect. If someone wants to study this type of a move, it happens many times, and usually you see momentum and you see big actually catching a trade in here. Sometimes it's actually better than even catching a trade in there in terms of the reaction and the type of targets that you can look for, because the break of this opens the space for price to now be ready to go all the way. So this was a nice move on silver. I think we are going to continue to bounce around here. I think on silver we're going to be bouncing in between these levels still. But if you start breaking below this level, I think it starts opening the door to go a bit further down. But I think we can now bounce in between here. But yeah, silver
what's happening on US 30. That's a bit of a interesting move right there. If you look at the 1 minute. Sure what happened there.
Not sure. Is it that one or any other indice? That one.
No.
Yeah, I'm not sure. Is it a glitch? Is it something? I have no idea what happened. No clue. You're welcome, Tiago. So how does it work, the giveaway today? Do you want to explain, everyone? How do they participate? Is it going to be announced today, or is it going to be just on Thursday or whatever?
Yeah, so we're going to be running the giveaway today, tomorrow, and on Thursday, and the winners are going to be announced on Thursday. So yeah, it's you're gonna go into that link and make sure that you join the link, and also subscribe to the channel and hit that like. And I'm also gonna be putting in a if we get enough likes, we're probably gonna give away a couple of extra accounts. Now I don't want to be using that as a big a big part of the giveaway, right? Because we're gonna have like bots coming in and just hitting that like, and it's just gonna completely destroy the stream. But if we get some organic growth in the likes, I'm definitely gonna be considering that.
Because we crossed 80,000, right? We are already 80 on the channel.
Yeah, 80,000, that's right. And welcome, Victor. What's up? Welcome.
Victor, what's up?
Hello. I'm joining you too, if you allow me.
Of course. Actually, don't, Victor. You can go. You are not allowed actually to come here today. They're not welcome.
How is everyone doing? This is a beautiful day. It's Tuesday, 29th, and it is 2 days after the trade deal with EU and US, and that has been moving the market considerably. I'm sure you guys have been talking about it, but it is the driver this morning. Actually, it was already yesterday, but I mean, it's continuing to be pressing on the market, and everyone waiting to see how the other European leaders are, interacting with that fact. That is it. How are they assessing that deal that EU has on behalf of every country in the EU? The supernatural body has that deal that they have made with the US.
All right, guys, I'm gonna jump off. I'll be back after the ABL session, and gonna get some lunch, and I will see you guys later. Make sure that you do hit that like and you join the giveaway. So make sure that you go into the comment section. I'm gonna pin that comment. You also have the giveaway link in the description of the video. Pedro, Victor, have fun. I will see you guys later.
Hey, we will. Thank you for the chance and the wishes, Jonatan. Have lunch and enjoy your meal.
Take care. Bye.
How are you doing, Pedro? How is everything on your side?
Yeah, it's all good. I was actually quite sad, I don't want to say sad, but disappointed with the timing of the move on the euro. By the way, did you catch anything or not?
No. I had only losses. I'll be open about them, because that's what we want to do here, right? Show everything as they are, raw, authentic traders. That's what we are. That's what we uphold to be as well.
So did you try to find the move then?
No, it came into some structures. I mean, on EU, where you are currently, and if you look to the left, there is a quasi in there, and I did get it. Actually, it wasn't an EU, it was on GU, but I did get yesterday an entry, a couple of signals to get in, and it didn't react, right? It actually did react, but it did not
Yeah, it reacted
hold.
a bit. Yeah.
But it did not hold the structure, and of course that's going to happen when there is no reversal, right? My as a reversal trader doesn't mean that I know when the reversals are going to happen. We don't know that. But the only thing I do, at least I speak personally, and I think that is, generally it's true for all traders and reversal traders in specific, we don't know when the reversal is going to happen. But we get in at a place, in a circumstance with, the factors and everything points that there is a great chance of a reversal, or in any case, getting in at a specific area with a specific stop loss gives you perhaps not a high win rate, but in the long run, you do catch these bigger winners that will compensate for these losses. And so this is one of those days, or even few days, because that was yesterday. I don't know how it's going to be today for me, where my reversal trades will fail. And if the reversal fails, I'm going to be stopped out of all my trades and have losses, and that's part of the game, right? It's the setups, the reversal setups that I see and that I try to catch, they only work if there is actually a reversal, obviously. Right? So that comes with the strategy. The same thing as with trend following strategies. They only work when the trend is actually following and continuing. If a trend following system gets into a signal, right, gets into the market, but then afterwards there is a change reversal, obviously that trade, depending on how quick that reversal happens, it might be a place where the trader is still, the stop losses hasn't been put into profit yet, so they will have losses, and it's normal. It's completely normal. I'm not at all I don't feel bad about it. I mean, it's normal. Nothing to do about it. Just have to embrace it and make sure that you do follow the plan. That's the only thing I can do, and everyone should be doing, following the plan, the trade plan, that is.
Yeah, my view on the pound. I actually tried to short it, but I didn't. I didn't get filled. So for me, the way I was reading it, I was not expecting the reversal to happen. I mean, the big reversal to happen here. I was not really expecting. I did try to short it, but again, it was Asian session. I think this has been quite. At this point, I don't even know the word for it. It's not funny anymore. The amount of tops that are created around the Asian session on FX. But I was not expecting actually price to just turn from here. I was expecting a retracement, and I was looking for price to get a little bit closer to this level before a bigger move to the downside. Because when I saw this break, for me this was already kind of a break to the downside on the pound. But in reality, I didn't really pay attention. But when you're looking at the 4-hour time frame or something like that, this is almost kind of a quasi-modeling here. It kind of head and shoulders, whatever you want to call it. Because we have this structure here, we have that move, we have fake out. In here, it's a slightly move down, and then basically price came really close to this structure again. So this is actually quite an interesting pattern. I actually just noticed that, I think a couple of days ago, that we had all these left shoulders in there. I was a bit too zoomed in here. But yesterday, so I didn't really rate it that much this level anymore. And I think the way price moved to the upside around this level, price had already touched those levels. I can see this level as well, the way you see it. I think this was a nice quasi model, and price indeed reacted from it. So this was one of the last levels, in my opinion, that the pound would still react from before maybe dropping, or if price by any chance was about to go up, this would be the level around here. But I needed this level to be broken. And the way euro dollar and the dollar index was moving yesterday, I actually was looking more for sales. And sometimes it's a typical move on Monday on this type of a move as well, that we have the opening, price moves down, and basically price will not really create any new tops from the opening, and actually maybe the move it will be to downside. Where I was trying to catch the move or the short which unfortunately didn't get filled. It was even now when price broke this bottom in here. I think I placed an order somewhere around here, whatever. And I was looking for price then to go all the way to those lows, but that never got filled. Okay, so when price broke this level, price just stopped in here, and I was looking for that final move there into this supply level.
Beautiful.
That's never happened.
Beautiful.
Yeah,
setup.
never happened though.
I know. I was waiting for the same, not exactly the same entry and stop loss, but I mean for the same thing to happen, for it to come back, retest those structures, as it's going to drop, because it was very clear that it was weak. I guess it was getting weaker by the minute. So I was looking for that. I didn't get triggered either. It didn't come.
Yeah. I think price can still bounce from it, but now the target is going to be different, right? Now because this was literally to catch the momentum. This is actually one of maybe only trades that I try to trade in terms of a continuation setup. Usually it's much more in terms of reversal. This I would consider as a continuation type of a move, but I need this type of structure to actually try to find it. And plus all the kind of correlation, yes, super strong dollar, weak euro, and so on. This looks like that was about to happen as well. Yeah, that was my reading on pound. I think it's reacting nicely. I think we are going to continue to move down a little bit. I think it's already a good reaction from this demand, but I think eventually we're going to push a little bit further down on the pound. And maybe if price comes back into this level, maybe that's where we're going to find new shorts. We'll see. Now it's a different dynamic now. Yeah, on the euro it was unlucky. Actually, I didn't really want to short euro dollar. That was not the euro pair that I wanted to short. When I looked at the euro index, I was expecting this. I even last Wednesday, when he talked before the ECB press conference, that was on Thursday, price was somewhere around here, I think, and I mentioned that I would like to see kind of an expansion before then a big move to downside. It was close to this level. So actually I was looking for that, but again, that Trump had to speak at midnight or whatever, and then price just crashed in there. But the pairs that I was more looking for, it was actually, I think, euro pound. Great reaction as well. This is kind of a potentially good Quasimodo. We have this double top in there, fake out. We have this top to fake out. Great reaction to the downside, and it was also euro yen, if not mistaken, that I was looking for that short. Again, price still reacting really close to these levels on the left. It's kind of a good level in there, and I was looking for that short as well, which already happened. And even euro CAD as well provided a nice move. Also still reacting from these tops, which is maybe still a Quasimodo when you're looking into the higher time frame. We have this left shoulder, we have that top, and price is literally reacting from it. Yeah, those are actually more of the euro pairs that I was trying to look for a short, not exactly the euro dollar. But all of them worked quite amazingly, to be honest.
Yes.
Yesterday.
Yes, that is actually one of those pairs you mentioned. I'm going to talk about as well today, because I think there's an opportunity in a couple of pairs, given these moves. These moves are extraordinary in the sense that they're not usual. They're extended. They are not average. Not only that, we have tomorrow. We have. Let me double check before I talk. Tomorrow, yes, we have the CAD.
FMC.
FOMC for sure. But for those traders who trade the Canadian dollar, tomorrow we have the interest rate on the Bank of Canada as well. FOMC at the end of the day, at least for us Europeans. Sometimes the FOMC, the fund trade, it doesn't spike as much as the NFP usually, but when you zoom out, it still has its great moves. Sometimes it's a little bit before the actual release of the data. A lot of the times it's afterwards, but you still get these big move, even though they don't happen like on the minute like NFP or on the second as NFP. But this week we also have the Bank of Japan coming out with their policy rate, their interest rate. So there is a lot of numbers. Today we have JOLTS, of course, in about 3 hours and 45 minutes. Job opening on the US dollar. That's going to be interesting as well. And last but absolutely surely not least, NFP on Friday. So this week is it started with the deal already on Sunday, and after the deal at the beginning of the day, the market was indifferent. Market didn't really react to it much. I was expecting, right? I think much after the open, I was expecting a big gap, because there was so much tension for this deal, and Trump was at some point giving out all kinds of big numbers in terms of what the tariff he's gonna be putting on EU, and it comes at 15. Now I'm not a fundamental analyst, but I thought there is a deal, there is no uncertainty anymore, at least for the coming future, that the market would probably expect this to be a good thing. Although I don't trade that, trade the fundamental side of things. But the market didn't really, it didn't gap up. It had a little move and then just steadily was sold during the day. And who knows, maybe that's still going to continue going through the week. And then we have all these macroeconomical events coming on top of them. So that makes this week probably
one of the busiest,
the most difficult week to trade, because there's so many things that are changing, that things are not the usual, and that also brings the opportunities, because there's a lot of traders that are going to be trapped. There's a lot of structures that normally have perhaps a low chance of holding or a low chance of breaking, that they will hold and they will break in these instances, depending on what direction the market goes. And that gives us a lot of opportunity, right? So for example, on EU, right, that big move we have seen, bearish, right, that downwards move that we've seen yesterday and still today, we are seeing that weakness. How many trend following traders would have been triggered now to be short based on that move?
Sorry, go again. How many people are shorting or trying to look for shorts?
Yes, because higher trend following traders who, that swing low was taken out today. How many do you think traders are already in a short, or might be trying to still catch the, that short move? And perhaps it might continue to go lower. But what if it doesn't? What if we get a huge, even not complete reversal, but a retracement, a very bullish retracement? How many of those short traders, those trend following traders who might now be short, would be in drawdown and probably hitting their stop loss? A lot, if not all of them who got in recently, right, this week. So it also it's going to be difficult, I think, more difficult than usual to trade this market because of these unusual market conditions. But it also brings us with a lot of opportunity. And that's what I like about trading, right? It always comes hand in hand. Our risk benefit, right? Something is higher risk, but it gives you a higher profit as well. The opportunity, if you know how to approach it correctly, appropriately. I'm gonna show what do you think about that before I change
it's going to be, so the deal happened, the big move happened. So this was, again, something that I was looking to capitalize on. I didn't. So now the question is, what will happen next? And as I mentioned, just to give an example, maybe someone that actually looked at this move and now may have FOMO, or now that they saw the break of the structure, maybe they're going to be looking for short straight away, right? Maybe just retest this level and maybe try to short again. And that's an easy way to kind of make these traders under pressure is just to push a little price to the upside, because they're going to be placing their stop losses somewhere around here. So this is one of the first ways to kind of trap these initial or late sellers on the euro dollar. Then there are the other traders that they may be completely still bullish on euro dollar, because they're maybe looking at this trend all the way since a few months ago, and they may think it's just a retracement and maybe price now is ready to go, right? So this is one of those situations where maybe you're going to have different types of style of traders, different views, trying to identify which direction actually price will go next. We could have that, so because something that can happen as well, because it was such a massive move just in one direction, that maybe there are still all those orders left behind somewhere around this top, especially because the move was happened during the Asian session. Maybe many people didn't manage to get in, so maybe price actually is going to have that deep retracement before making another move down. This could happen as well. This can be in the cards as well in here. And usually also, when price just moves in one direction like this, if after breaking maybe some key level of structure around here, maybe there's not much to hold price down as price maybe move for price to make this move to the upside again. So that's another situation, because there's no structure, almost no structure being created around here. Price literally just fell off. Maybe if there's any structures, maybe more of these structures on the left side that price should have respected and it didn't, and maybe now they work as a kind of previous supply becomes demand, or another block that extend to the other side. Something like that. For example, this level maybe could be an interesting one. So it's going to be interesting. It's going to be, in addition to all those news, you still have GDP as well. That's tomorrow. So it's going to be the first GDP announcement of the second quarter. Last quarter it was negative. This quarter is expected to be positive. And we still have core PCE as well, which is kind of on Thursday, because it's the last day of the month. Usually that's when you revisit. So it's another inflation data report that's coming out. And we have the earnings. So it's going to be literally a crazy week ahead. Yes. So there's going to be a lot of opportunities for everyone to look for. Yeah, but go ahead. I don't think you still have your chart open, Victor. If you want to bring your chart.
Good point.
Yeah. And you're talking about, just to finalize in here on Euro Yen, because Abdullah mentioned Euro Yen. So that was one of the first ones that I was trying to actually short it. I didn't. We did manage to break slightly below these lows. I would even like to see price breaking below all the structure. Okay, actually I like this demand zone where price is reacting right now, because this double bottom didn't really reacted from it. Now this low is reacting from it. So I'll be a bit more bearish if we do break below this level. So we'll see. For now, maybe price can retrace. First of all, we do have this structure just similar to the $. Our price may retrace closer to this level and maybe find some selling opportunity. When you're looking at into the higher time frame, yes, we're approaching this top, and this can be the beginning of that potentially Quasimodo in here. Okay, this can actually end up in a Quasimodo level or pattern as well. Okay, and that will be kind of that head, trading the head that I actually love to trade again overnight. So yeah, I think we are going to have really nice, interesting price action to potentially look for shorts on the Euro Yen. We are getting there.
Actually, you're looking at all the pairs that I was going, not all of them, but many of them that I'm going to. No, go ahead. It's I mean, the viewers will love it, right? To see some different. We didn't coordinate this, and you're talking about the same pairs that I was gonna cover. But go ahead. I think it's great.
Sorry, that's it. Go ahead, share your chat. Go ahead, Victor.
Don't forget, everyone watching, if you enjoyed this stream and you want us to keep on doing this, or you have perhaps some feedback on how you would like us to approach you and deliver this content to you, and the topics we will be discussing, please let in the chat us know what your feedback is, so we can include them in our consideration. But I was gonna say, hit the like button if you like our stream. You think this is something that is beneficial to you and to others. We think it is. Hit the like button, subscribe to the channel, tell your neighbors, tell your friends to do the same. And we together, right? It's a group effort. You are part of it as well. Together we make this an even better stream. That's our goal. All right, so I'm gonna be talking. I have a lot of pairs that I would like to discuss, because they all have like different reasons and why they're interesting. And the viewer watching, this is not an invitation to take any trades. Remember, we are not giving out financial advice. These are not signals. These are not direction instructions for you to do anything. The only thing we want you to do is become a better trader. but you can use our ideas and test them for yourself with your system and see if it resonates with you. Maybe you haven't seen that pair, and by us looking and sharing that setup, perhaps you might find your setup, your strategy in that pair as well. So let's begin. I have a number of pairs, and probably I will not be able to discuss them in the following 35 minutes because, of course, Pedro has to speak as well. I cannot have, the speaking opportunity all day. Pedro is dying to share his idea, so I gotta be fair, right? So let's continue, Pedro. All right, so this is we haven't switched yet to my screen, which I will do just now. Why would this guy be wearing a mask? Why? That's a very good question. Because I'm the mask trader, right? If I were to take the mask off, I wouldn't be able to call myself the mask trader. Very simple, very logical. Nothing to it. All right, so let's continue. EGJ, Euro Yen. All right, so let's do the top-down analysis on the monthly time frame. We do have a couple of structures, and I'm gonna take you through them, and we will update them for you while we do that. So looking from the monthly, so we're not looking at these Ws, these weekly structures as of now, just the monthly. We are getting back into a bearish structure on the monthly, but it hasn't broken the neckline. The neckline was below us. That means that long term, not necessarily in this candle or the next one, but perhaps in many candles to come, I expect this level to eventually not hold. As long as the neckline is not taken out, I expect this structure to break, meaning price to continue to go higher. Not necessarily now, as I said, right? It can do all kinds of things in that process. It can still come down to retest that structure. Let me change this to a more visible. This was something I was using yesterday in our workshop, and I left it at that color. So maybe also the width. Let me change that to something a bit less wide. All right, so what I was saying was that eventually I expect, I don't know, right? But given the fact that the market hasn't broken the neckline, that to me is the left shoulder. That is the head. I say this left shoulder head, but that is only after it breaks the neckline. It hasn't broken the neckline, so we can't say these are actual. This is an active quasi or a valid one yet. It isn't. But that would be the supposed to be the left shoulder and the head, and that would make this the neckline hasn't broken. If the neckline isn't broken, to me that means that the market is not ready to reverse yet, right? So in the end, I expect based on that market structure, I expect the chances that market will break and continue at some point in the future in this time frame is very likely. But we don't know. There is no way for us to know if it's going to do something perhaps like this before, right? Coming all the way down. Pedro, what's happening?
I want to be a hero as well. I want to be a hero. I'm going to hide myself as well.
That's a good one. Yes, superhero traders or super traders channel. Maybe I need a cap as well, right? I don't have a cap. I have a cape, not a cap. A cape. I do have a cap, a baseball cap, but I mean a cape. Maybe I should get a cape as well. Just to make the picture complete.
Yeah, I'll bring some glasses.
Coming back to the charts, we have so I don't know if price needs to tap into perhaps some monthly bullish structure before breaking, or if it's going to happen right away. We don't know that. We never know that in advance. You can have some idea based on the momentum and things like that, but not for sure, right? It's never that case. So that's the only thing. The only thing is we have come into a bearish structure that eventually I don't expect to hold, but will have some kind of reaction. Okay, so we have that on the weekly time frame. We also have, and on the weekly time frame, there is a quasi. The neckline is here. As far as I'm concerned, that's the weekly quasi line, and there isn't anything in this leg, which is the lowest point from the top. There isn't anything except that entry order block on that weekly time frame. So this makes it very interesting, right? We have a bearish weekly valid weekly entry structure, right, on this pair, while the monthly is not ready yet to actually be part of the reversal. So who knows? We'll see what will happen. So we are getting into a very weekly interesting area to short the market. Let's go deeper to say what are we seeing. But before we do so, look at what the market has given us or has shown us within that weekly entry order block. What do we call this candlestick combination? This one and that one. In the chat, those who know, those who are in the know will be able to tell us in the chat what kind of pair is this? What's the combination here of this this candlestick pattern? Let's see if I can. There is a delay, of course, between when we talk and you guys hear us. So there is a delay. Of course, it's going to be a delay when you guys write back. But in the meantime, I'll kind of continue. Right. So this is right the second bar, outside bar, Manish. Yes. That's an outside bar. And what does this is a bullish outside bar, obviously. What does it indicate? Even though the market is in a bearish structure on the weekly time frame, and on this and on the front, and that is from a structure from before, right? From this structure, which is from a year ago. Even though we are based on data on the left, it is abandonado, bebe. I'm not aware what candlestick combination that is. This is a new one. This is a very new one. I don't know. Is that something you know? I like it. I really like it. Abandonado, bebe. All right. Maybe that's the name, and maybe some people call the outside bar an abandonado, bebe. Right? Perfect.
Yeah,
I don't,
that
is it? Is
yeah,
it?
I think in the live stream in Portuguese live stream that you do, some of the guys were talking about specific candle names, candlestick names or patterns. Abandonado bebê, it's kind of a lost baby, not exactly lost, like more of the parents kind of drop him off somewhere and didn't care about him. But I think that's more when there is a gap between kind of a move up and then down, and then it was kind of the hanging man or something like that as well. And I don't know, the pregnant something, I don't know. There were some just weird names in there.
Okay. All right. Now let's call it Abandonado Bebe. I like the name. It's catchy. It makes you think, right? Whatever helps you to remember the pattern is okay. Anyway, this outside bar indicates that even though we are from the left, from historical data, we are in an area that, yes, Miguel, it's catchy, right? I'm perfect. I totally agree with you. Even though from the left, the historical data, we are in a range based on that order block, which is part of the quasi. We are in an area that we're supposed to, or we are expecting sellers to come in at some point, right? Before it invalidates. However, recent price action, previous couple of price action, right? These outside bars, this outside bar, what it indicates is the opposite. The buyers are coming in. Okay, so this makes this pair, and perhaps any other pair where you see this happening as well, very, very interesting. This is exactly the kind of market condition that will trap people, where you have opposing signals or indication or price action. One side tells you to sell or to get ready for a sell, the other one tells you to buy. Only one of them is going to be right, and you bet the other side will get trapped, most likely, or high likelihood of getting trapped. And that's where you will find these big moves when they get pushed to the wall, with their backs against the wall, and they will have to capitulate because the market didn't go in their direction. That happens all the time, right? Trap traders getting out of pain, and that is exactly what this kind of combination will give us. So this is why I'm showing this pair. I might even, actually, I am in a trade in this trade, in this pair, but and this is not everything yet. So we have these two structures, right? So the weekly entry order block on the quasi and an outside bar. That outside bar gives us this order block on the weekly. Okay, so a fresh weekly, not an entry, just a regular weekly, let's see, a weekly order block. There we go. That's a fresh weekly order block, which with the fact that we are in there, we are pushing, we can expect a move upwards, right? A move away. This is the retest, the immediate retest of that order block. Based on the fresh order block, we can expect this move to happen, right? And based on this order block, we expect at some point the sellers to come in, right? So we expect this to happen at some point, not necessarily right now, but at some point while price is within, and maybe both of them can happen sometimes, right? So we still have a little push. It will break even higher, and then perhaps in a couple of weeks get the reversal that we could be that we are expecting without breaking that order block. But of course, that doesn't always happen that both of them are going to be right. All right, so that's on the weekly. Already on the weekly, this is interesting. So if we go to the daily, this gets even more interesting. The daily actually has a quasi, right? A quasi on the daily time frame. It's the very minimalistic. I like that style, by the way, minimalistic. But this quasi is with style, right? It's minimalistic. It has a established downtrend, and it is coming back to the only structure it has. Well, that's half of the range, so it's no surprise. Comes back to that range and goes to the order block, which is no longer fresh. It already this order block below, but it's still there. And because we have this area after tapping it, the overlap between these two structure is a very, very like a high place to be getting a trade, and that's where I got my trade from, right? So between the overlap of these two, this is a slightly adapted. I'm gonna show you right. That's the overlap. Okay, that's the overlap where I was fishing to get my trade in. All right, so so that's on the daily time frame. So we have a weekly fresh order block. We have a daily quasi bullish one, indicating that this area is a good area to look for entries. And if we go to the H4, what do we find? Do we find a quasi? Let's see if we do find that quasi. That quasi is screaming at me. Here I am. I hope you can hear it as well. It is we do have a quasi right here, and that this is the neckline, the left shoulder, the head. This is the established downtrend. It goes out, breaks the neckline, and comes back to, let me redraw the there we go, redraw the retracement tool, and we do have a large, very large area, which doesn't really help us because it's almost as wide as the as the daily, but it is visible on the H4. I like that. I like when patterns are visible and have, you know, valid structures and area on multiple time frames, because it means that more people are seeing the same thing, right? So this is the area. So now what I am waiting for, I already have enough to look for a long in this area, which has weekly, daily, and H4 alignment, right? So I'm looking for the H1 to give us a sign. Let's see if I can get that. Here you are. Yep. On the H1, this would be the structure. That's on the quasi as well. And I'm still looking for another entry, not more than the one that I already in. And the structures we have is we only have one, which is this one, right? And it invalidated on the H1. This is the H2, by the way, not the H1, but it would have invalidated on the H2 as well, and the H1. Both of them would be invalidated. So the quasi there isn't anymore. It would have been, it is already invalidated. But this area on the H4 is currently leaving a new fresh order block, right? So even though it invalidated the reversal initially, this still is looking great for a possible signal later on today, perhaps, right? We have an H fresh order block, which is within all of what I just mentioned, that quasi on the H4, daily quasi, all in that area. If we go to lower time frames, what do we find, right? We have a quasi here. Actually, there isn't a quasi here yet, but there is. Look at that, entry order block on the H1. Actually, it's not an entry order block, it's a fresh order block. And we can go into 5 minutes and look for some entry in here. 5-minute entry. Let's see, the quasi would be here, there. That's the quasi. And this is the fib, retracement, and we can point out the entries. That's 1, 2, and 3. Basically, I would give this time frame 3 chances, waiting for price to come back to these areas and waiting to see if there is a appropriate signal once we get there, a confirmation. If we get that, I get in, and you choose, right? You choose where you want to put your stop. Do you want to put it perhaps 5-10 pips below that area, or the whole structure? That's up to you. I'm not going to tell you what to do here, right? You're just showing the opportunity here, the possible reversal. And if that were to happen, we were just talking about that. You just said it. There isn't a lot of structures to hold price going back up. So there is this initial area where we have an H4 for targets. We could use this for targets, right? That's an H4. But this is quite very, very conservative because it is still within the demand zone. So if this demand zone, which we expect to be to have its effect on the market, we're going to expect for this to be used as a trampoline for price to be much higher. And what do we have to stop price? Almost nothing, right? On the H4, this would be the structure to be targeting. So let's mark that, and let's go to other time frame to see if we have other areas as well. We don't have anything there on the H2, and H1, of course, we will have some areas, right? So what I would be in this instance would do is I would target this as my intraday trade, right? Something like this. This is not a daily, this is an H1. And I would target the rest of my swing trade for that structure on that H4, because obviously that's going to take some time to reach it. Can go fast, but it's probably gonna take some time. Just let's take a look. That we're talking about, well, it depends on where the entry is, but let's assume it's in here. We're talking about 200 pips. Now, 200 pips on the yen pairs, I've seen them happen in one day, but that's not, even for the yen pairs, that's still a lot to ask. So I would target perhaps this area of perhaps something else, and then leave this for an overnight trade or even a couple of days. So that's euro yen. But remember what we just said. This is an unusual week. So structures who look great, it can still fail. So do not marry the trade. If the trade stops you out, leave it alone. The market is telling you that the setup is invalid and don't touch it anymore, right? So risk what adequately, so that you're counting that even if you lose, it's not a big thing. It's just part of the game. You can continue. Don't go bet the farm on any setup, and especially if it's something that I or anyone is telling you to trade. I'm not telling you to trade, by the way. I'm just showing you the opportunities that I see in the market, right? So no financial advice. Anyways, but so this is EJ. Very interesting. That's something that we could see for maybe maybe the coming hours we could see some coming back. And you can do this on other time frames as well. You can do it on the 15 minute. Is there a quasi on the 15? Actually there is, and the entry order block is right here, right? So I like that. Maybe this is all the retracement we're going to get. That's the 15 minute, right? See that? So the 50 minute is actually even better because it doesn't have any other areas. It only has one, right? The less order blocks it has entry for the quasi, the better that structure is. The more it has, the worse that structure is to use to catch your reversals from. Why? Because you can pinpoint the exact structure. You can define the invalidity of your setup with high precision. All right, so that's EJ. Let's look at the chat to see what we have. Besides abandoned baby, what else do we have in the chat?
You have someone asking about a quasi. What is a quasi for you?
Perfect. That's the right kind of questions we need.
Yeah. Just while we look at the chat, let me just bring my just in terms of the euro yen. Something else that we can also pay attention. It's something that I've been using a lot recently. So yes, we do have potential that move to the upside. If someone is looking for extra confirmation or correlation, we can look at the yen index and euro index for extra confirmation to see which direction maybe price can go towards to or not. So basically, for example, this is yen index. Yen index usually does the opposite of the individual yen pairs. Euro index is reacting from these lows on the higher time frame. Okay, it's kind of a strong level, and we already had a little bit of a reaction, but price then so reacted from here, right? And then price eventually reacted or respected this supply level. Then price came off the back, respected again this demand zone, and now went up, but then reacted from this supply. So I think if we do break above this level, I think yen index can go higher, but this level could be an interesting one to hold it or potentially move down. So basically, if we do have this move to the upside on yen index, that means that most likely euro yen is going to move down. If the yen index actually just starts moving to down like this, then can help euro yen to move higher. And then you can take a look into euro index and you can try to do exactly the same structure. For example, if the euro index actually ends up respecting now this supply level that we broke in here, starts moving down, of course that means that most likely euro yen can also push a little bit more to the downside. Or if you do have contrarian moves on the yen index on the euro dollar, maybe euro yen is going to be just ranging without direction. Okay, so you can also use these levels that you can see on these indices to increase the likelihood. For example, when the euro dollar or when euro index does make this move to the downside here, yes, you can expect that the yen index move to the downside, and in addition you have also this move to the upside on the yen index, so that actually creates a lot of negative pressure on the euro yen. So this is just an addition, just a bit more advanced if you want to start using correlation, but it works quite nicely. And one of the reasons that it works quite nicely as well is because on the indices, euro index or yen index, price does tend to respect the levels quite nicely without much manipulation or fake outs or something like that. Price tends to respect quite nicely the levels, the support resistance, more the basic ones that you see, or the supply demand or the box, whatever you want to look for. But this increases the likelihood of you seeing actually which of the pairs can you try to find maybe a better opportunity, even within the end pairs. But yeah, just to finalize on that. Yeah, you can go into your quasi mode, John. Victor.
Yes, let's answer. Who was it? Let's see. I think it was. Let's see if I can find it. Here it is. Martin I. Thank you for the question. It's. I always love when people ask us, or at least I do, to explain the topic, because sometimes I think not everyone. I'm pretty sure. I'm convinced that not everyone, knows about the pattern, because quasi, head and shoulder is very popular, but quasi, not as much, right? Even though it's really, they're families they're relative to, of each other. Head and shoulder has, is an established pattern in terms of the name, how known the name is. All right, so the without explaining anything else, this is the pattern on you would find on any classical textbook on reversal patterns. This is the head and shoulder. Obviously, I painted or I drew more than just the pattern, also the continuation of the pattern. But what it is a pattern where you have an uptrend defined by higher highs and higher lows, right? Established trend, up or down. You have a head, right? And then a shoulder that is typically seen, shown as symmetrical to the other shoulder. So that would be the left shoulder, the head, the right shoulder, and then you have the base, right? The base of the structure, which is this line right here, right? Typically, you will see that on the classical examples that the base of each shoulder are roughly the same. And in other words, head and shoulder doesn't have to always be, perfectly symmetrical, but it's thought of as something that is relatively symmetrical, right? And it is a very popular reversal pattern that is very, very effective, very useful to use. And the quasi is short for Quasimodo, that fictional character in the movie Notre Dame. But the quasi, in comparison to the head and shoulder, does not have that symmetry, right? So the shoulders, the left and the right shoulder, are not the same, right? They can be something like this. That's still a quasi, right? Wouldn't be a head and shoulder, but it will be a quasi. And this can be even further down, and it can have all kinds of different shapes, right? And it will still be a quasi depending on how you define your quasi. But that's what it is actually. Quasi is an asymmetrical head and shoulder where this low after the top is lower than the base of the left shoulder, right? The base of the left shoulder, I don't call it, when I talk about quasi, I don't call it the base of the left shoulder, but it is the neckline. I call it neckline because that is where, the head ends, basically, right? You have the shoulder, the left shoulder, the head, and the head ends here, and that's the neckline. And once it's broken, it sounds very cruel, but no neck is broken in the example. When the neck is broken, you have the activation, in my terms, of the quasi. So then I have a quasi. Before that, without the neck being broken, neckline, neck, it sounds so cruel. I don't know why do I say that. If the neckline isn't broken, then there is no quasi to me, right? So I can see the pattern and the possible left and head, but there is no quasi. Once it's the neckline, the line is broken, I have a valid quasi to start looking for entries. And you can use, basically, this is a quasi 101 for those who are wondering how to trade this. The way to trade this is the following, right? This is the point, this is the head, and this is the lowest point that it got after break that line, that neckline. Now, this is the area that I use from this point to that point to look for indication areas where the market can offer me some kind of added advantage, added indication that this pattern is actually indicating a reversal, because you can have the neckline being broken and the market simply does not reverse. It just continues, right? It continues. It goes higher and it takes out the head and just continues higher. That's a failed quasi, obviously, right? And so how do you distinguish? How can you increase your chances of getting identify an actual reversal? One of the things that I use is the Fib retracement. So I take it from the head all the way to that down, and that already eliminates 50% of the range. So I'm only interested in this area, right? From the midline to the head, right? That's already increasing my probabilities because I'm getting the better structures to trade from. Then I use another thing. I use order blocks, right? So I have some certain rules, and if you watch our channel long enough, you will see those rules being applied. And I will be looking for reasons to go in on different structures, for example, an order block that can define and reduce and refine that area even tighter, much tighter. The tighter the area is, the better the structure is, right? Because I can define my risk based on that, and I can get in bigger size. And that's it. So that's the quasi. I hope that explains it to you for Martin I. If you have any other questions, stick in our channel. Actually, if you have more questions, Martin I, in order for me to answer them, you have to hit the like button, right? There is a special sign. It will pop up in my screen telling me that you hit the like button, and then I will be able to answer your follow-up question. I'm just kidding, obviously, but don't mind my silly jokes. Hit the like button nonetheless. And some people said they're dad jokes. They're those jokes that are not so funny, but you laugh at them not because they're funny, but because the whole performance is kind of silly. Anyway, I'm making fun of myself here, I know.
Just one thing in terms of the Quasimodo, something that actually it works quite nicely is actually when you have one Quasimodo inside of the other one. That actually plays quite nicely, especially on the right shoulder. What is this?
Vinicius is funny. Our friend Vinicius.
Yeah, so basically when you have okay, let's just use this. Okay, so when you do have that breaking theory, then Quasimodo could be somewhere around here. Just draw it. Okay, somewhere, let's call it like somewhere around there with the left shoulder towards there. Potentially look for a short, but sometimes what you can look at, like imagine that this is the head, okay, and this is the head, something like that. Price goes up, but to have a Quasimodo in here, it's something quite nice. Okay, so all this price action is within the head, and then you basically have a new Quasimodo within here. Okay, that's actually quite nice to look for as a level to potentially look for an entry within. If you want to be a bit more specific, as price is moving up, try to find within this level. Okay, basically this circle is within here, and you can try to find it in their trade potentially. Yeah, that works quite nicely. In addition, if you want to find them, basically.
Perfect. Yeah, I like that.
Yeah,
I like that. You can there's so many ways. There are numerous ways to approach these strategies, and in the end, you need to find your way, right? Do simplify it as much as you can. Do your data collection, and based all the rules you have, all the patterns, all the things you use in your trade plan, based on that data as much as possible, if not everything, and trade yourself to wealth, basically. Yeah, so that's EJ. So let's continue with, because the things that I would like to say about this are not over, right? It's not everything. We have that's the EJ. This is the bullish daily quasi, which has this order block, right, which I find very attractive to trade along from. And you can go to the lower time frames to find your entry. That's all good. What I just explained, right, that quasi right there. But there are more structures to it, and I would target in this, as I said, as the initial TP1, perhaps at the end of a day, the day that I enter, and probably take this as a long-term, or not a long-term, a swing trade. And you could even consider a continuation, right? If you have the right momentum and other indication that this could continue, and that would also be fine to do. However, the outside bar on the daily, I meant, we have, while we have an outside bar on the weekly, a bullish one, right? That indicates us, right? That gives me the ability, or not ability, but when I see this and I trade it, my target I know from from my data, I know that I can project the TP based on these structures, right? One of the things that I do is I take the ATR, a little tip here right before we go. We have about 15 seconds or so. I see the gentleman already getting in the background. They're getting ready. They're doing the 3 thumbs up. And let's see. We have an outside bar on the weekly. And if you take the lowest high of those two and double the ATR, so what is the ATR? The ATR is currently at 279 on this pair. So if you double that, that's going to be what? 560 almost, 58. So 558. That's what I would be targeting, right? So you measure that from the high, 558. There. Let's put it at 58. So that's gonna be 178.38. I'm gonna be marking that with a line, and we'll see this. We'll visit this in time, and we'll mark. I'm gonna stamp. That's gonna be the market target, macro target. Let's go back to the daily and see that that's the line, and I'm gonna mark this, the date we put this in. This is the 29th of July, 25, right? So this is the date. So if anything, anyone can come back to YouTube and watch this stream to see how it was at the beginning. And if we get there, we will be referring to that date, to this stream. Let's see. We have, yeah, that should be enough. I was going to timestamp that as well, but I don't think that's necessary. Oh, hold on. Because I'm precise. I like to be as precise. Timestamp is 2 hours and 30 minutes into the stream. Okay, so if you want to find back this moment, we talked this in, let's say, a month from now, then you're very easy to go look at this date on the YouTube stream and the timestamp, and you can verify that this is actually the level and the place that I placed it. So that is nice to come back to. All right, that's it for, at least for me. I don't know about you, Pedro. I think you're...
Yeah, it's for me as well. It's
for you as well. All right. I'm going to come back in about 57 minutes and 45 seconds. Pedro, how about you?
I'm going to come back for the Portuguese channel at 5 p.m. We're going to talk about news. Well, this is the week. This is the perfect week to talk about news. So that's exactly what we're going to talk about. Potential strategies to trade NFP, FOMCs, EPRI, and so on and so forth. Yeah, so that's where you're going to find me. I'm later on at 5 p.m. That being said, thank you guys. Press that like button. Continue to subscribe to the channel. And thank you, Victor, as well. It's interesting that to see you trading Euro-Yen and not just Euro-Dollar or Pound-Dollar. So welcome to the Yen pairs.
No, I do trade them, but not as frequent. Actually, on this, I have to nuance that statement. I trade them all the time, every day. I trade all 29 pairs. But the strategy that I talk about on screen, that I share about, I usually only trade EU and GU. But that's not because, that's only because I only have one set of eyes and 2 set of hands. And, I don't want to be overstretching myself. But if there are opportunities like this one, the EJ, then I will, try to grab them as well as much as possible. So but yes, thank you for welcoming me to the club. Pedro, okay. I'm gonna be handing this over to Mike, and I was looking for where is that ABL intro, right? ABL intro. I found it. All right, guys. See you guys in a bit, everyone. Till later.
Thank you. Have a great day. Bye, guys.
Well, hey, that intro gets me so hyped every day.
I feel I actually have the full audio file for that. And I feel as though I need to start using it as like a back testing, almost like an alarm clock, you know, like wake me up in the morning. So yeah, how you doing, Griff? Good to see you, mate.
Yeah, I'm fine, thank you. How are you? Good to see you as well.
I feel as though I may compete with you on the sleep deprivation charts at the moment. Because I am being woken every night at the moment by either my son, my daughter, or my dog.
Oh my gosh.
So I am literally, the bags under my eyes feel like the biggest sandbags you can imagine.
Yeah,
so,
my eyes are the opposite. They just water.
Oh, don't. It's crazy, isn't it? He's like, oh, let's take a look at the charts. Oh, okay, yeah.
I've got my screen brightness like all the way down.
Yeah, exactly. It's like, just turn the lights down. Let me go back to bed.
That's why you got to have dark mode charts. I remember
exactly
I used light mode charts, and then somebody was like, "Why are you doing that? If you're going to be trading for a long time, it's just bad.
Totally.
Bad for your eyes."
Totally. I mean, it's I can't remember when it was. I mean, on my MT5, I had like the white charts, and I changed the background to black, and it's like, oh, my eye.
Yeah,
it feels so much better. You just have to somehow figure out the rest of the frame, but you know, at least the background of the chart isn't so bad.
Yeah.
I haven't gone as dark on my trading view though, because I feel as though if I did that, then my color schemes is going to be totally out of whack. So, but maybe I'll try it. I don't know. We'll see.
I recently changed mine to be completely black. It was kind of grey before. Now it's completely black because I got a OLED monitor. So where it's black, the pixel is literally off, and it looks so good. I think I said this last week though. Sorry.
Did you say it last week?
I might have done. I can't remember. I think I showed off my microphone as well. I haven't attached it yet. I've upgraded everything.
Yeah, I remember you the microphone. I don't remember about the OLED monitor though.
My computer, I've got an extra. I've got a new computer. It is about this big.
Oh, nice. What did you get?
Well, I built it myself. I got all the parts and put it together. I can take this off actually. I give you guys a scale of the size.
That microphone there, beast. The microphone hanging down as well.
You can see this is the length.
Oh, okay.
Tiny PC, and just out of interest, I'll show you my old PC behind me. It's a beast.
What are you going to do with the old one then? Ooh.
Oh, it's all blurred.
Griff, you got your blurring settings on.
Well, it's a water-cooled PC. It's got a custom loop, and it is so awesome. Oh, you can kind of see it there.
Yeah. What are you going to do with it now then? There we go. You can't hear me. He hasn't got his headsets on. I was going to say you can't hear me. What I'm saying.
No, I can't.
I was talking to you as like I'm just talking to myself. So what made you upgrade? Because I mean, if that thing's such a beast, why change it?
Yeah. Well, the graphics card in it is like 2 generations old, and I figured, like, I tend to upgrade my computer around every 2 generations, so I've upgraded from an RTX 3080 to an RTX 5080. Henry asked if it was a 4090, but yeah, I upgraded that. And Henry says, you need to upgrade your camera now? And I have. I've got the same camera as you.
Yeah.
Which follows me around.
Feel like we're going skiing.
Yeah.
Oh dear.
Yeah. Anyway, I hope you don't mind me showing you guys all that.
No, that's good. Do you know what is interesting? Because I have been looking into all things like graphics cards and everything else lately. Because I haven't got anything too special. I think I've got a 3060 or 4060. Can't remember. 4060 Ti, I think.
Yeah.
And just purely because of all the monitors and all of the streaming and all the other stuff going on. But I watched a video on YouTube where a guy actually did a comparison where could you get a super powerful machine actually running on old, like, second generation, third generation hardware, let's say, rather than the new stuff. And he was like, you could go for old but gold, or you could go for new but like average, if you know what I mean. So like, like the VRAM and stuff like that you would get on your graphics card, you just can't get it up to the high levels like you would get on the older generation of cards. I found that quite interesting, because I've been looking at, without going, I know this is a trading stream, guys, I apologize, and Jonathan's probably going to kill me for this, but do you know what? He drills cans with a drill bit on this stream, so I'm going to talk about...
Yeah, Henry's just said that Jonathan's always showing off his gear as well, so...
Yeah, exactly.
We're just becoming the same person.
Exactly. We're just mimicking the legend that is Jonathan, right?
Yeah.
Maria, good to see you. Mariana, good to see you. Manish, good to see you. Vinicius, are you around? I don't know if... I haven't seen Vinicius in ages. Good to see you, Vinicius. Hope you're well. Been on holiday or something. Akram's in with us. Henri, of course, is with us. So I was looking at it, and because like ChatGPT, Claude, and all these guys, they are just eating up our data and eating up all of our information and everything. And I mean, if you think that Facebook and those guys were bad with your data, I mean, these guys, it's such a grey area. So I've been looking at hosting my own LLM. And running it on a GPU server. Now the problem is that running a GPU server is actually really expensive when you run it 24/7. You can run it on instances, so you have to fire it up and then it will start working, and then you just pay as you go, sort of thing. But even then, it's still really expensive. And to get ones that will actually run a kind of model that's as powerful as ChatGPT 4 or Claude Opus or Claude Sonnet, the hardware that they need is ridiculous. There was an email that went out yesterday from Anthropic with regards to Claude, saying that they're going to be rate limiting people because people have been using Claude code for building all sorts of things and just smashing it. And I use it, and I've seen that the service is degraded quite a lot. So they've put limits on everyone now because they just haven't got the infrastructure and the hardware to run it. And so, like, everyone's saying about AI taking over everything else, but I remember talking about this a while ago. The hardware just isn't there. There isn't the power to run all of these super, super powerful machines unless you're willing to pay, like, literally thousands. I think I looked at one of the graphics cards to run like one of the most powerful models, and over here at least, you would need to pay something like £15,000 just for the graphics card.
That's crazy. Yeah, because they have like their own industry standard. The graphics cards that we buy are just like for gamers and like video editors, which I am both. For like industry level, it's like there's a whole other type of graphics card.
Yeah, absolutely. You can use SLM. I'm not sure what SLM is, Ilias. Let us know in the chat. But anyway, we've only got 45 minutes because we just wasted 10 minutes chatting about LLMs and hardware, but I thought it was nice. What you've been looking at this past week, Griff? You've been seeing anything of interest?
Yeah, I technically took a trade. It's technically though, because it lasted all of like 30 seconds. I set my order. Well, I saw price hovering around this level, which is where I would have my order for a continuation, around right here.
Yeah.
And I was on my phone, and I was like, oh yeah, that's a valid setup. I don't want to miss it. It was like hovering around where I'd set a pending order, so I just market executed. And then I came over to my computer, and actually this wick is a little bit too big for me. I mean, because we've had this huge impulse down afterwards, the scales are a bit skew-whiff now. But yeah, my scales were like this, and for me, with the scales I've got, I would say that this wick is a bit on the larger side for EU. So I got to my computer and I was like, no, this doesn't really fit my plan. This is maybe an 8 out of 10, and I'm trying to only take 9 out of 10s. So trying to, stay really defensive with my capital, I decided to kind of bite the bullet and close the trade because it didn't fit my plan. and it ended up actually being quite a nice winning trade. This was yesterday. I would have trailed if I would have stayed in the position. It would have made me 3 or 4%, but it's not a part of my edge. It's not in my backtesting data. Like, it's not in my data set. So this isn't actually, I could look at this and be like, I should have kept it running because I missed out on 4%. But this isn't actually a part of my. It doesn't fit my plan, so it's not in my data set. So it's not part of my edge. So it's not a missed trade. It's just not a trade. But yeah, that's the only trade I took. I think I made about £2, £2 profit.
It's a profitable trade, though. There we go. It's a winning trade. We got it.
The win rate.
I'm pleased to hear it. That's all we want to hear. Good stuff. So, anything you're looking at today or this week at all? Any particular pairs? I mean, obviously, Euro USD has seen a big move. In the last couple of days. I mean, that's pretty much from just the dollar just really picking up a massive amount of strength, having been so weak for so long, right?
Yeah, it was looking really good. All of the dollar pairs were looking good for shorts, where they are the second pair. Was it the quote currency? Yeah, the quote currency. And the only opportunity that really set up was this continuation, which unfortunately I'm so strict. It didn't quite fit my plan. And now all of them have kind of retraced aggressively. Like this, we've got this V. So now I'm not looking for anything really. I'm all these pairs where we've got a V. So EJ, EU. I think it's just those two, EJ and EU. I'm just waiting for a range and a continuation of the second leg. This is kind of what I'm expecting after this type of price action. What about you?
You think we've dipped down low enough on those to now see kind of reversals back up?
Potentially. I think when I see, I would classify this as a shift in momentum, and after this kind of price action, I'm either expecting a range or a reversal. That's the extent of my kind of analysis, like a range or just to continue up like this. It's super common when we get this V type price action. It's something I've been looking into. I think I mentioned it maybe 2 weeks ago. Just a really simple entry for having higher trade frequency. Just going for like one-to-ones like this. They play out so often. You could have one on EJ as well. When you see the shift, just putting your stop loss at the lows, putting your take profit at the high. In this case, it's nearly a 1-to-2. But yeah, these setups, I see them everywhere, and they seem to really play out quite nicely. So that's definitely something I'm going to be diving deeper into in August.
Okay. Ilias has come back, just diving back into the topic from earlier, small language models. Okay, gotcha. The only thing is with the SLMs, Ilias, is that they just don't have the same kind of analytics as you would want for something like Claude Code or something like that. At least from what I've seen, anyway. I might be wrong, but I'm playing around with it. I want to kind of see if I can replicate Claude Code for cheaper, but it seems it might not be possible actually. But we will see. I've got a VPS that I set up for myself, and I'm running a few bits and pieces on there, NAN and a few other things to try and automate some bits and pieces, so we'll see. And Henri, I mean, not only that, but also look at what they did with DeepSeek. When they released DeepSeek a few months back, DeepSeek just kind of blew all the other models out of the water in terms of power that it needed to run compared to all the others. Now, hasn't necessarily overtaken Claude Code, for example, coding work, but just in terms of sheer size of the model and everything else. The Chinese have definitely proven that you don't always need to have the hardware to necessarily do it either. And Eheb says the USD CAD long from yesterday ended up longing as well. I
like that. It longed well.
It longed well.
It longed, ended up longing well.
It did long well. It did look very, very nice indeed. Hasn't quite gone to where I would have put it on a break and retest. Let me just pull that up on my screen. Hopefully, I am going to caveat today, guys, that I have got some sort of cold or something, so I apologize. I'm going to try not to sniffle. If I do, I apologize. So we had this move here. I was waiting to see, can we push on up? I can't remember where you had your long. You had remind me, but ideally, I would have liked for us to come up higher. Now, it might still do it, but I'm not sure if the dollar has stopped its moves now. But it would have been a nice break and retest idea of, right, okay, come down to the 61.80 and push on up. But it would have been a long hold as well for that one. But yeah, good one. Nicely caught, my friend. Nicely caught indeed. What do you buy or sell? I tend to buy groceries most days. Sell my services. I'm not sure what you're referring to, Crazy Mystery.
It's a crazy mystery.
It is a crazy mystery. What's Crazy Mystery asking? Void, I'll 1v1 you on LOL. I'll play Zyra, you play whoever you want. Hallowing Abyss, First Blood. I've no idea what you two are talking about. I'm guessing it's some kind of gaming thing. That is, that may as well be gobbledygook.
They're talking about League of Legends, and Henry's referring to a specific character, and Void can play whoever he wants. And I assume Hallowing Abyss is the map, and First Blood is the game mode, but I don't play League of Legends, so that's my best translation for you, mate.
That's more than I would even have guessed. I would have been low or laugh out loud. No, I mean, that's just me showing my age as a millennial, isn't it?
Capitalization, that's how you know the difference, I think. League of Legends.
Oh dear. And is Akram going to take up the challenge? Let's have a look. It's been a while. 7 days. It'd be fun in the same Valorant lobby. I have no idea what you're talking about.
So Valorant, he's saying let's play Valorant instead.
Okay. All right, you guys. I used to play Call of Duty like 20 years ago. That's what I used to do. So you guys are in worlds beyond my knowledge and experience. Well beyond my knowledge and experience. So yeah. Crazy Mystery says, let's take a trade. I'm here to take some monthly expenses.
You can take some of my monthly expenses if you want.
I'll sell you my monthly expenses.
My rent, my groceries. Like, I'd really appreciate if you could take some of those off my hand.
The nappies. I mean, good one, wouldn't it?
Yeah. Sorry, we're teasing you, Crazy Mystery.
We're just teasing. It's all in good jest. Gold looks like an interesting one. Similar kind of structure, like you said, that V structure. I'm not entirely convinced by it at the moment. I want to see a better setup, whether it's going to decide to take this liquidity level or not, which is on the 22 minute. You can see it there. It's rejecting away from that level, suggesting that we might be in longs now. So I'm not sure it's ready quite yet, but I mean, it's got liquidity down here, and it's also got lots of liquidity higher up. So longs look semi-decent. If we look at it, how it tapped in down here, tapped in nicely, and the sell-off was massive. I mean, the sell-off on gold was huge from Monday. So it wouldn't be a shock to see us. I'm looking at Euro USD. Silly me. I don't know why I thought I was looking at gold. But it wouldn't be a surprise then to see a buy on Euro USD. I told you guys I'm sick, so my brain isn't braining. I apologize.
That was a great analysis of EU.
It was a great analysis of gold being EU.
I mean, it doesn't make a difference when there's if you don't consider the fundamentals. It's funny that I used to do this activity where would post. I'd like post a random chart without the ticker showing, and we try and guess what the symbol was based on like our understanding of pair characteristics. And you end up getting really good at figuring out what the pair is by looking at the price action. Obviously, it's easier on like higher time frames. Like on if you're trading 1 minute and stuff, you're gonna have no idea most of the time. But yeah, it's a good exercise.
Yeah, I have literally no idea when I'm looking at things, but my brain just isn't functioning like a normal brain should function at the moment. So yeah. But anyway, do you guys know TJR?
Yeah, I've heard of him. He's a crazy guy. He's I'd say very much a marketer more than a trader.
Okay, never heard of him.
No.
I don't pay attention to any of those influencer folk. But if you like him and if he's selling you the trades that you want, then go for it. Yeah, Leon, it really isn't. It really isn't. It's not braining at all. It's like,
that's funny. And we were just saying how I like the long is longing, but the brain is not braining.
No, the brain is
that's how you want your trading to go. You don't want your brain to be braining, but you want your longs to be longing and your shorts to be shorting.
Exactly. I would say actually this looks like it's still going to go lower on Euro USD. Just seeing how it's forming the structure at the moment, it's broken this support here. We'll see, but it does look like it's going to go lower. It is leaving a trail behind. This is Euro USD, just to remind myself more than anybody else. But the move up was pretty strong, but there is certainly levels that are left behind for it to come and take. Might be something that comes down and retests down here before heading on up. Those of you that were watching on the stream earlier, on the ABL stream, we were talking about possibly looking for a pullback here and then looking for buys, and sure enough, it did come in, and the buys were in. So anyone who caught that Euro USD buy would have been very, very happy indeed. I did see this response here on the 1 minute and on the 5 minute, but I wasn't, even though this was an area that had been used as reaction points before, I didn't like the fact that it hadn't come up as high onto that wick, hence why I didn't take this trade. Otherwise I would have been in on this sell. 90 minute is forming this engulfing candle to the downside, and it's still got another half an hour to go. Yep. So the 50 minutes created that engulfing candle, so it does look like there's going to be more strength in the dollar for the time being. So we'll see how long it lasts, but certainly coming down to this area, you may want to see, as you said, Griff, you might look for ranges rather than us maybe just powering through and selling off completely. So yeah, let's have a look at gold. There we go. I've opened gold, and
before anyone asks, we're anticipating the gold.
This is gold, right? So we are looking at gold. This is the gold chart. Just everyone to be clear. Yeah, let's have a look. On the 1 hour, leaving a lot of liquidity behind here. We've taken these lows. I would say, yeah, look at this, all of this stuff up here. I would say it's looking quite nice for buys, I would say. Yeah. Let's see. Yeah, half an hour left on the 7 hour. Let's see, the low 94, 95. Yeah, it's taken the lows. I would say gold looks good for some longs intraday. Tap down into this area. Let's have a look at what it's looking like on the 5 minute. What do you see when you look at that, Griff?
I see an uptrend, high highs, high lows, and it looks like we've kind of just broken below that. We've broken below a low there, so I would expect, that one.
Yeah.
Damn, I can't annotate. Yeah, we've broken below that, but we've not really had a strong reaction. So I think the next few candles are important to determine whether we're going up or down, whether or not we react in this level, this specific.
I agree. Oh. The internet gremlins don't like Griff today. I'm getting caught by my cable. I don't know what happened to Griff there. Griff just got kicked out. Hopefully he'll be back in a second. Gold looks like it's going to probably range for a little bit here, I think. We have got the jolts coming out in a little while. So we might just be waiting for that to come out. We have got here he is, he's back again. I don't know what happened to you there.
I hit the back button on my mouse.
Oh.
I just put my hand on my mouse and hit the back button. I have to be careful of that in future.
I keep thinking that like the system's kicking people out or something. It's just people just incorrectly clicking.
My bad.
Is that a bear flag on the gold 1 hour?
1 hour is my domain. It does look like a bear flag, but I would say that if you look at the white candles versus the black candles, the white candles are so much stronger. Like the pullbacks to the downside are weak. The pullbacks to the upside are quite strong. So I wouldn't be surprised if we just continue trickling up from here.
Yeah. If you look at these 1, 2, 3 on the 90-minute, they give you a really strong indication of how much strength there is in this move up. I think overall, I still believe we're short on gold overall, but I think we're going to see us pull back up, maybe up to the 338 area before we sell back down again. So, I mean, the 15-minute has just created this inside bar here with the high and the low. So those are now 2 key levels to look for. 14 minutes still waiting. Yeah, I think there's definitely more arguments for going higher rather than lower. Just trying to see what else have we got either side of it. Levels there. See, that's a nice formation there. If we can come back and retest this little pocket, which it might do any second now, and hold it, then that might be good for buys. But it does need to hold it on that level. Ideally I need to see some kind of wick reaction on that side there. So it's taken that level. It has dipped into this engulfing candle on the 3-minute. On the 2 minutes, nothing doing, and on the 1 minute, also nothing doing. But that's decent enough wick to maybe suggest buys. It's not great, but I mean the trade idea would be something like, I mean, for a better confirmation, look for something like that. Stops below and send it up. Come in for this level up here would be a nice area. But right now it's not giving that confirmation. So we'll see. This engulfing to the downside's taken the body of this one, suggesting bearish momentum, but it's from there, it's then just sitting there and doing nothing, and it's creating its own inside bar, which has already taken the high of, and it's left the low now. So, yeah, I wouldn't necessarily count this as a trade, guys, if I'm honest. It's not, he says, and then it's not looking perfectly aligned as to how I would want it to. Gold is doing what gold does very, very well, which is chop and catch people out. Doesn't mean that this is a bad trade idea, but
have to be careful.
You see how it's very, very specific as to whether it takes levels or not, and reacts away from it. So if I saw us wick straight up now on the 1 minute, then that would be a nice indication for us to get in on a buy. That's not really strong enough for me. I think we're still going to come and take this low. And I think that was on the 15-minute. Yeah, that was our 15-minute inside bar. So I wouldn't say it's necessarily a buy just yet. He says, and then it spikes up. But that's why you've got to be careful with gold, because it can catch you out without even realizing. So then you look at the other time frames and just see, right, when you see a pump, does a pump actually indicate anything of great significance, or is it just a 1 minute idiosyncrasy kind of random thing? Let's have a look. I mean, it's still in this wider zone that I quite like the look of, so we'll see. Let's keep an eye on that one, and we'll see. M76, I have no idea about ICT, so I can't tell you. I can tell you what I know, in terms of, not what I know, what I understand as liquidity, what I look for as liquidity, but I have no idea how it relates to ICT at all. Right now, that structure there, right now on the 1 minute, actually looks really nice. But I wouldn't enter it until the candle's closed and we see how it's actually going to close. It has taken that low and it's done this nice little structure here where it's still refusing to take that 15-minute. You see, there you go, and it pushes down. So so it's a wait and see for the moment on gold. But M76, very simple. The liquidity pairs, see, that's not the setup I want to see, so I'm not taking that trade because it's broken that structure. You see that? So looks like we're going lower on gold, at least for the time being. We'll look for any other structure that we might have here that it could react from. And
it's important to wait for reactions, isn't it? I think it can be, especially on gold, waiting for a pending order to be triggered. You've got to be super careful because you don't know how it's going to tag you into that pending order. Ideally, you're looking at a level where you would set a pending order and waiting for a candle to react in that area. You'll probably get worse risk to reward, but you'll probably get a much better strike rate.
Yeah, absolutely. Looks like it wants to push down lower, which in theory would actually tie in with what I was saying earlier about some strength coming into the dollar. So it might not necessarily just be weakness to gold, it might just be dollar strength. We have got this area here where we have this little pocket of liquidity just down here. So that might be it. But M76, very quickly, inside bar, perfect equal highs or equal lows, and wickless candles. So where the open or the close is the same as the high or the low. Those are the three levels of liquidity that I look for as targets for price to hunt down. And once it's hunted them down, it either leaves them behind, so it just creates a structure where the wicks and the candles reject that level, suggesting it's going to leave it for later, or it takes it and then it will head further down for the next kind of key support area. So that's where I've got this one marked out.
Do you use those three elements for entries and targets?
Yes.
Nice.
Yeah. So just looking at the 1 minute at the moment, okay, we can see here that we've got a wickless candle here and we've got an inside bar here. So those are two key levels that are going to be potentially targeted, right? And then just below it, we've got this little pocket of this candle here, where it took the body of the previous two and it retested this one. So for me, that's a nice area to potentially see a reaction from. So potentially see price come down, take it, and then maybe have a reaction back up. Now, it's not inside a higher time frame zone necessarily, I would like to see. But having said that, I mean, these zones here are very old, and I should probably delete them anyway. And then I'm therefore better off looking at other ones now. Let's see. We've taken that level, as you can see there. It would be not unusual to see a reaction from here now, but the fact that this one was engulfing to the downside suggests there's a lot of bearish pressure coming into it. So I'd be waiting for price to come down, take it, and then shoot up, but it needs to respect that wick. If it doesn't respect the wick, then it's not a valid entry. There you go. So it hasn't respected that level, so it's going further. Where is it going further? Well, let's have a look. We can see here that we had this wickless candle here, and we've got this inside bar here. So next area that it might want to respond to is this one here. So that's kind of where I'm looking for reactions, basically, is in those little pockets where you won't necessarily expect it, but if you have it, broken down by different time frames, then you have a better understanding of what's sitting where. So here we've got here we've got an inside bar on the 5 minute and another one up here. So those are also areas that we might expect a reaction from. And then you see how this one is this kind of engulfing on the 11 minute. So again, it might be a nice area to see a reaction from. And then that would probably tie in nicely with a trend line of sorts. If we were to go like that, see it tap in there and then shoot on up. But yeah, it's a waiting game, trying to see how it plays out and just marking it out on those areas where you think, right, okay, this could be an interesting one. On the 1 hour, this looks nice for 1, 2, 3. This one less so because it didn't really push on hard, but the next one did. So that's why if I look at the 2 hour, what does it give me? Well, it gives me this here, which was rejected. So again, and there you've got another one on the 3 hour. 3 hour tested these ones and pushed on up. So it does feel like there's a lot of bullish momentum in gold right now. So it's then just a case of finding that pocket entry of where it's going to come and take those lower level liquidity levels and look for a reaction. So let's catch up on chat. What's happening in chat? Gold head and shoulder pattern on the 4 hour. I'm looking for a sell around 33.70. You could do, yeah. Griff, Henri says you can disable the side buttons of your mouse. He's done it for his using X Max button control.
Thank you. Yeah, I'll keep that in mind. I think I've got a Razer mouse.
You use them though, don't you?
Not much, to be honest. They could probably be better assigned to something else.
Yeah.
I know some people, they assign it to trading view. So if you're backtesting, you can just click forward. Yeah, I'll come up with some cool shortcuts. Thank you for the tip, Henry.
This looks like an interesting one. You see how it's on the 1 minute, it's just resisting taking this level. Now it has tapped into this, so it might be a nice opportunity for a buy. Not an ideal one, but sometimes it doesn't take much. Yeah, I would take that. I like the way that's formed. So stop just below and take it on up and see how that plays out.
Do you journal your paper trades?
I don't know because I'm not properly trading. and that's just purely because I'm only trading when I'm streaming.
You can't really do.
So
it's not very entertaining to see you journal, I'm sure, on a stream. So that's.
It's not, do you know? It's not even that. It's just that I'm so busy with so many other things that at the moment my trading is live here with everyone, or on the ABL stream, and that's it. Because then the rest of the time I haven't got time to be trading, and I notice that when I do, if I'm kind of distracted by something, or my head just isn't in the game on something, then I find it actually my trading isn't very good when I do that. So yeah, it's a shame because I do enjoy trading, but kind of work commitments, live commitments, and everything else just don't afford me the luxury of being able to really dedicate proper time to it.
I understand.
So my hope is that I can get to a point where I can properly get into it and properly do it, because before I started doing ABL and stuff like that, I really did spend a lot of time trading. So we'll see.
Maybe you can trade higher time frames. That's a way to free up.
Yeah.
That's what I do.
I need better self-discipline for that, and better headspace for that as well. It's just not happening at the moment. But yeah, I mean that's not a bad catch. I don't know how we're going to react from here. That's the only thing to watch out for. We just tapped into that wick, so really want to see us break that level. Otherwise, it might just be a quick 1 hour scalp maybe, because it's not the cleanest. But you see how it just refused to take that low, and it wicked quite high. That's why I like that kind of trade, where it's something the gold does very often, is it will leave that level of liquidity for later, and normally it comes very, very close to taking it but leaves it behind. If we look on the other time frames, we can see that we've had a decent wick back there, 10 minutes showing a nice wick up, 15-minute relatively decent wick back, 22-minute hasn't closed yet, got another 10 minutes left on that, or 9 minutes left on that. So that's interesting. That's 30-minute haven't marked that one out. That's a 30-minute inside bar, but I mean it doesn't look bad for a trade right now, but it all depends on how it wants to react with this inside bar that it's now created here. Now, if it breaks past this one, then it looks good. There we go. So I'd say we're good for a buy here. And yeah.
If you don't mind me asking, where did you learn these principles, like the way price reacts behind inside bars and wickless candles? What was the third one? Inside bars, wickless candles, and equal highs and lows.
Equal highs and lows, yeah. I can't remember where I found it. It was just, there's loads of stuff out there, and there's loads of people just sharing random bits and pieces. And I remember finding it somewhere. I can't remember where it was. And it was very obscure. And I thought, that's interesting. And I had a look into it. This was back when I was trading just full time entirely, and it really just caught my attention. And as I back tested it, I realized, there's something to this. And it's what's great about it is that you take the same setup and the same structure throughout the time frames. So at the higher time frames, it gives you your bias and it gives you your direction, let's say. But then as you start marking out those zones, you drill down, and that's where you can get the 1 minute entries, because you're already in a pocket, you're already in an area where you think, right, okay, this is now gonna, this is gonna give us some kind of higher time frame, kind of reaction zone. So yeah, this way of looking at the charts, I've been looking at it and trying to fine tune it for the last two and a half years, I would say, something like that.
Yeah.
So
that's fantastic. It's interesting because I also consider inside bars and equal highs and lows in my trading, but I have, like, especially inside bars, I really look at them and reactions off those levels. But I haven't looked at wickless candles, so that's cool. That's a new idea for me. Which would you say is like the most significant level?
Good question.
I guess it depends.
I haven't
on
noticed
the
any particular one. I haven't noticed any particular one being particularly better than the others. That's why I mark them all out. So normally what I would do is I would mark them out and I would say, right, if I was trading properly, I'd be going in and I would say, right, and I would mark it as a 1 minute, right? And I'd have it marked there. And then quite often they are not just a 1 minute, they're also a 5 minute and a, something like that. So the ones that are really strong are the ones where it is liquidity on multiple time frames. So what I mean by that is, let's say, for example, you find an inside bar or a wickless candle like this one here. If that was also an hourly candle, then you can also count on it being a 30-minute candle, a 15-minute candle, a 5-minute candle, a 10-minute candle. And then that just means there's this really big concentration of essentially imbalance in the market, because the wickless candle, essentially all it is just at that specific moment when that candle opened, there was just a ton of orders came in to sell it or to buy it up, and there was no moment for price to equalize and kind of just find equilibrium between the buyers and sellers at that moment. So generally I see that as meaning that there's orders sitting there waiting to be fulfilled.
I really like that logic. Yeah, that's great.
So I mean, at the moment,
what you described there is what people call price being fractal, where there's like patterns within patterns within patterns within patterns. For anyone watching, if that's helpful, price action being fractal is what Mike described there, where there's liquidity on 5 minute, the 10 minute, the 1 hour, and all of these stack on top of each other and make the trade more high probability.
Yeah, exactly. And if you look at if we look at the weekly, especially on gold, so we can see here's an example of one. So I marked them out color coded as well. So the purple is the highest strength. So that's basically anything from 3 days up on the time frames. Then you go down to blue, and then light blue, green, and so on. I just drill down. So I have it all color coded. So here you can see that this one was an 11-day inside bar, but it was also a 4-day inside bar. Here you've got this one. Now this one I haven't marked out, but I haven't actually given it all the names that I should have given it. But if you look at that one, knowing that that's a wickless candle, because I can see it, that's a weekly and a daily, and therefore all of the other time frames below it, meaning that there is a massive number of orders sitting here from the 19th of May that price will get drawn to like a magnet, just to equalize, and it may come straight down there and just react off it and leave them, or it might smash through it and sell further down. And then if it did, then I'd be looking for a reaction in this zone. So the idea is that you then look for the as well as the liquidity levels, you look for the reaction zones, and the strongest reaction zones are in the engulfing candles. And engulfing, I mean taking the high and the low of the previous candle. That's the strongest. So here on the weekly, for example, you've got this zone here. This wick is where price changed direction on the weekly. So in here is where all the buyers started getting in at a discounted price and started pushing price up to go higher. So the idea is that you would then theoretically look for buyers to come in again at this area, and that's really the crux of it. So then what I do is I just mark out these zones, and that's when I'm then drilling down, so it looks like this weird rainbow effect of random zones and everything else. But the idea is that if you see these candles, especially where they haven't had a reaction immediately, there's still orders sitting in there. And so when you have them marked out, you can look for opportunities. So this one here, for example, this would have been a really nice one where we came down, we had this weekly, a weekly inside bar, I think it is. this weekly inside bar, and look how we came down on the daily. Because it was a bullish candle that started to move, price came down, took the low of the previous day, and then shot on up, and it just left this level behind, suggesting that it's happy to leave it for now, but it will come back for it later. So yeah, that's just the kind of the concept behind it. And then all you do is you look for those setups, but you drill down, and so you mark out your zones, and any zones that sit in those really high time frame areas, those are going to be the strongest collection of orders, and therefore the strongest opportunity for catching something. Here at the moment, I'm just seeing this one here was a perfect equal high. See that there? Excuse me.
Wickless as well.
And wickless. So that for me suggests that is, I mean, I don't like the way that 5 minute has closed. So it's possible that we'll come down and we might just be leaving this for later, and we're coming down for this one first. So we'll see. I want to see a reaction elsewhere. On the 7 minute, it looks okay. And on the 11 minutes, it's not terrible, but it's only just closing now. So the 11 minute is probably going to create an inside bar like that in the next 15 seconds. So then it's just a case of just marking out your charts and saying, right, where do I see price reacting from? Where do I see price bouncing from? And you just mark out those zones essentially. And that's how you can then figure out whether or not there's a good buy or a good sell or whatever.
I like it. Thank you for explaining your strategy a bit to me, because I've always, I've picked up bits and bobs over the weeks and months that we've done the live stream on Tuesday together. So it's nice to hear explained properly. Thank you. I appreciate it. And I'm sure the people watching do as well. That was really interesting.
Yeah, no worries. So, I mean, here you go. There's another one. So we've got an inside bar there left behind. So this candle here is saying we're going to leave this for now. We'll come back for it. But you see how we've just had that reaction? It's taken the low of that inside bar, and it's now deciding whether it wants to push higher or not. If it pushes higher, there we go, it didn't. It took the low. It's taken the low of this candle as well. That one there. But it's now created another equal high. So quite possible that we'll now see a push up again to come and take these highs. But it all depends whether price wants to come and take this or not. So so we'll see. But those are the trades that I take, and then you risk 0.25% or even 0.1%. I mean, this is a potential trade idea. I look at it and I say, right, well, if we're on the 1 hour, I'm expecting us to come up and take this. So theoretically, come up to here, it's an 11R, 0.1%. It's a 1% profit. So yeah. The St. Juby says the 1 hour has no top wick. Could this be a target? Does it have no wick? No, it does have a wick. This one does have a wick. However, this was an inside bar. Now, really what I want to see right now is we're in the last 3 minutes of this 1 hour candle. I really want to see the next 3 minutes see us push up. If we don't, then that suggests to me that we are that we're actually going lower, and then I would probably close this trade. So unless I see some really strong momentum come in the next minute or two, I'd probably be trying to close this, because otherwise it suggests to me that 1 hour candle is going to close with a very small wick, and so therefore it's more bearish momentum coming in than bullish. But we'll see. It's not showing one or the other right now. If it does close relatively strongly on the hourly, then you can still generally expect to have price go back into previous price levels from that 1 hour candle. So what I mean by that is you wouldn't just expect price from here just to go straight down. You would still expect it to come back up and then down. So that's where you can then also, even if you see a candle like this, you can theoretically wait, sit on your hands, and wait for price to come back up and still maybe take some profit, but at least avoid, a nasty loss or something. So, you could theoretically, if you're only risking 0.1%, you could maybe bring it down to here and anticipate a reaction up here. If this is now a trade that you think, do you know what, actually this isn't going to work out, rather than just cutting your losses, maybe what you do is you just go, right, let's just see if we can turn it into a 1-to-1 or something, and read it that way. Did that make sense? So so it looks like it's going to close quite strongly on the 1 hour, suggesting that we're going to go lower. So then probably what I'd expect is we come down. There we go. See how it pushes back up? Because that wasn't really a strong 1 hour candle, now I get the opportunity for when it comes back up to say, right, where's my liquidity levels that it's going to come and take before it sells off further. And that's the opportunity there, is wait for it to come back up and then maybe sell, just close it there so you've got a little bit of profit. And then you've just got the trade management of that in there, rather than just saying, oh, it was a loss, what do I do? Well, hang on a second, it doesn't need to be a loss. It can be, it can still be a win of sorts, but just not the kind of win that you were looking at when you were risking 0.1%. But yeah, that's basically it.
That's very interesting.
Apologies, guys. We haven't really kept too much of an eye on the chat, so my apologies for that. That is my fault. But we have got Deanna and Victor waiting in the wings to hand over the reins of the live trading room over to. So they'll be coming up in a second. But all that remains for me to say is to thank you, Griff, once again for your company. And look forward to seeing you again next Tuesday.
Yeah, nice chatting to you, Mike, and thank you everyone for tuning in.
Cheers, guys. See you soon.
See you. Bye-bye.
See you. Oh, I
Hello?
don't hear you. Now I hear you.
Yes, you do.
Yes. Hi. I'm sorry.
No problem at all. No problem at all, Deanna. How are you doing today? Let's see. That's me. That's us. We in great detail. Let's change
Yeah,
that.
I know.
That's a little bit too much of us.
Right. You're not ready. You're not ready for all that. Hello, Manish. Hello, Louis, Marina. Welcome, everybody. So great to have the whole crew in chat here today. Good to see everybody. How's everybody doing?
Great. I suppose. Well, I felt that was directed to me included. I'm doing great, and I hope everyone else is doing great as well. Let us know in the chat how you are doing, because we are interested in you. Yes, we are. While you're considering or thinking about how well you're doing, why not hit the like button and subscribe to the channel right away? Right? Do 2 in 1. You can multitask. You can do it. Deanna, how was your day so far?
It's good. It's good. It's 8 o'clock for me, so I haven't done a whole lot. Got to sleep in a little bit compared to yesterday, so that was nice. And went outside, took my dogs for a walk. It is really hot, Victor. Oh my goodness. Till next weekend, and then we're gonna get a little bit of a cool down. How about you?
Yes, but being in a hot weather, that's good, right? I mean, once
Oh
it's too
yeah,
much.
not complaining. I'm just a little melty.
Yes, I've been doing great. I had a busy morning. Been checking the markets. I have a couple of pairs that I started talking about an hour ago, actually 2 hours ago, and my previous session, because I think this move we had on euro, which also obviously is going to make all the euro pairs move a lot. That is, and it's not only the euro, of course, moving, but especially the euro. That brings us in a lot of opportunity. Yeah, I took a couple of trades already yesterday, and I'm watching them. I'm monitoring them, mostly because the extension of the ranges. So they're mean reverting trades, and but even without that aspect, we can look into what the structures we are coming into. I think it's very interesting to look at, and there's a couple of pairs we can talk about. But before we do so, I would like to talk about Bitcoin. Are you holding Bitcoins? Are you trading Bitcoins, Deanna?
I am not. I don't trade crypto, but Dirk talked about it yesterday, so piqued my interest, and yeah, I'd love to hear your thoughts.
Well, we can do the top-down analysis using just technical analysis and nothing else. So no fundamental crypto info necessary. Just the technicals, and we can see what we can find. Let's begin, because I think it's obviously we had a breakout on Bitcoin, and Bitcoin has been on a bull run for since its beginning, basically. So I think it's interesting to see what is the technicals telling us. Where are we getting ready for the next move? Is that going to be to the upside or not? All right. So on the monthly time frame, the first thing we see is that this candle, and we are 2 days away from the end of this month, this candle, this order block, and by this candle is a threat. The current candle is threatening to close and invalidate that bearish order block. That to me is a bullish sign. Obviously, it is. If a bearish sign is invalidated, right, or it's like a balance, right? If you take the one negative out, the net result is a positive, right? So that is something that I'm looking at. If if this current candle of this monthly candle closes above this line, this level, which is 109,618.4 on this price feed, you can write that down. If by the end of the month, wait for the first day of the month, of course, to look at the end, how did the monthly candle close? If it closes above 109.61, 618.4, then that's the confirmation. Then you can start looking for your entry, perhaps on the lower time frames, because what is likely to happen is that this area will either it's a breakout. It's a breakout of that structure, and the market will do basically two things. Either it's gonna just continue without looking back. If it has a lot of momentum, that can happen. Or, and this happens in Forex very often, it will come back and retest these structures. Perhaps not as often in crypto, once it, because crypto is more volatile and can be much more explosive. It may not come back necessarily to deeper structures, but it can still come perhaps to that upper level of that, and that order block that recently broken or invalidated order block, and then perhaps continue its move, right? So that's one thing, right? Coming from the monthly, having the monthly at your side is one of the best things you can trade in. Obviously, you want to have alignment as well, because just one time frame doesn't may not give you enough good probabilities to get into a profitable trade or a profitable setup. All right, so that's the monthly. Right, so what else do we have? We have the weekly. We did have a weekly quasi reversal pattern that failed. That was this entry order block on the weekly, and that failed a couple of weeks ago. Oh, so that means that we do not, obviously, that means that the market wasn't interested in a reversal, and that we can actually, that eliminate that thought or idea completely from our charts, because that's something is not relevant anymore, that pattern. So what else do we have? We do have a bullish order block here, an outside bar on the Bitcoin, and that could be one area we could look for if price were to come back sometime in the future on the monthly time, on the weekly time frame. That could be somewhere we could be looking for to get in our push for that continuation. If the monthly breaks and invalidates that bigger that bearish structure, then you would want to look for the next time frame on the lower time frame, maybe the weekly and perhaps the daily, for indication where could you get in at a good price, right? You don't want to be buying the breakout as it is in strength and all the way extended. You want to wait for it to come back to some, value area, meaning I wouldn't say bargain, but at a better value, right? If you're gonna be buying it as it breaks out, you're gonna be paying more, buying it at a higher price, which is you want to be doing that. Actually, you don't want to be doing that. So that's the weekly. Let's go to the daily. So we only have one structure within the bearish structure, which we expect possibly, quite likely, will be invalidated at the end of the month in 2 days' time. So what else can we see here? There isn't anything else to be considered. So let's go to the daily. And what do we see here? We have, let me eliminate these for you quickly. What we have is we have a breakout, right, from current. This is not a order block, although I look at, I talk about order blocks a lot, but this consolidation, right, this consolidation, maybe I should change the color and have a template for consolidation. But this consolidation, we can clearly see we had a breakout. And what do we have next? All the signs of a very bullish market structure. We have a breakout and then a consolidation again, a smaller one, right? That is very, very bullish. That is basically the market doing this, getting used to the new level before it breaks out again, and and it assimilates or gets accustomed to to the new level. And as long as you are holding that pattern, the likely place is that it's going to continue, right? That's the signature of a bullish trend, very bullish. So that's something, that is information without knowing anything about the Genius Act or about anything else, without knowing any fundamentals on crypto, just looking at the technicals, you can see that this market is very strong and has all the signs that are inviting us to be bullish on it. So let's eliminate that because it's not an order block, and I don't want to confuse anyone. And if we are using any quasis, this would be the entry, the neckline. Let's see, the neckline on the daily this is, and that gives us, that can pinpoint where we want to be getting in if we do get some kind of a retest of some structure. This would be a daily entry, and that's it. That's the only structure that I have. It is above the weekly, so ideally, although that may not even happen, I do not know. But if we were to have, after the close of the monthly, breaking that monthly bearish structure, if we were to have some kind of a retrace into this area, and ideally within the day, so not closing below this, because otherwise it will be invalidating that entry order block on the quasi, but just a wick tapping into that weekly and then quickly going over, that would be picture perfect for me, because then I have also not only the market structures and the invalidation of the monthly, I have also a quasi on the daily. I would be all over this. I'm a crypto holder, but I would definitely be trading. I don't trade crypto or Bitcoin, but I do invest, right? So I'm an investor in Bitcoin, and that would make me a trade setup like this would make me actually trade it, not only invest in it, right? Take a trade for a couple of weeks, a couple of months, perhaps a longer term trade that is still, but a trade. So that was something that I'm looking for the coming, days. I like to keep it because the crypto market is very volatile. I want to keep it on the higher time frames. I make it easy for everyone, not looking for those very small quasis and very tight entry, because I think for crypto, for any asset that is very, very volatile, that is, in my opinion, not the best way to trade, especially if you're relatively new to the market. That's my ideas on Bitcoin. I always take my time to explain things.
That was a great analysis, though, Victor. Very helpful. I have like a little bit of a practical question.
Okay.
So we talked about Bitcoin yesterday quite a bit, and one of the
Oh.
questions that I still have about Bitcoin is, practically speaking, how do you invest it? Do you, like, my broker offers Bitcoin, but I'm not sure if it's the typical, if it's the full meal deal. You know what I'm saying? Like, if it's the real, I'm not saying it's not the real thing, but I'm not sure if it's the same as what somebody is doing, if they're doing it through, like, is Coinbase a platform? I really don't know anything about crypto yet. So
No problem.
can you fill us in?
Yes, this is not financial advice. And consult your own advisor at any time before doing any financial decisions. However, nowadays, for investing, not trading, but if we're investing, for trading, you can get these brokers like many out there where you have leverage and you can have CFDs on them. Well, not on the US, but you can have all kinds of structured products and derivatives of crypto. That is fine for trading. But if you want to invest and for the long term, usually these derivatives are not the best way to do that, because they may or may not have leverage into them. They may have higher costs, and that's not the best way to go. I mean, if you're investing for the long term, you want to have your cost as low as possible, and you want to have the actual product or as close as possible to the actual asset, right? So not a right on the product, but the actual asset itself in your portfolio. One of the ways to do that is by ETFs. They are exchange traded funds, and they are traded everywhere, and you can get them over everywhere. Any all brokers, investment brokers have these ETFs, and you can buy them there and hold them, hold the actual asset. Although you're not holding actual. That depends on the all the details and terms and conditions of each product, but usually it will be a investment vehicle where you'll get a pool and things like that. But it's actually holding bitcoins within the pool, and that's, I think, is for most investors is the best way, right? ETFs are low cost in ongoing cost, as well as in buying them, and they're easily tradable. They're very liquid, so you can. I think that's the best way to invest in Bitcoin, and many of, not only Bitcoin. I mean, all the equities as well. You can, one of the very basic but very powerful ideas to build your wealth is just go have an ETF on S&P 500, right? Which is giving you exposure to the whole market, basically, and well diversified, but still very equity, so still very volatile depending on your risk appetite. But I mean, ETFs are the way to go for investment, I think.
So one of the concerns I have is that's not actually Bitcoin then, that you're trading like with a middleman. Does that concern you at all? That it's not
Well,
actual,
you have to.
you're not actually having Bitcoin.
Yes. Well, I'm no expert on the crypto market. I'll say that right away. However, what I do know is that, of course, you'll have to look the prospectus, right, of each product, which they specify who is the what entity is the custodian of the assets, right? And if, for example, they're doing lending securities, I'm not going to go into all all because maybe it might be get too complex. But you have lending facilities. If it's a lending facility, if they are using future markets on the balance sheets to to replicate the move of the underlying assets, all these things can increase the risk somewhat, and you'll have to read through them and educate yourself to choose the right product for your for your needs. But doing it through the ETFs is for a lot of people who are, because if you actually are holding Bitcoins, you need to be holding the keys as well, right? You are the there are many ways to hold Bitcoins, but I mean that's one of the things, and that's a big risk. I mean, if you don't know what you're doing and you lose your key, you lose the money. So
That's
that,
yeah,
that
that's a big concern.
that's
So so
that's a tiny minor concern, right? You lose actually the whole portfolio because you lose the password.
yeah.
So but there are other things.
So Maya Trader asked, what's your reluctance? And my reluctance is, oh my gosh, I can't even like I'm not saying I'm gonna lose it, but I've watched horror stories where like a guy, his laptop got thrown away and his key was in the laptop, and like it just seems daunting to me. And there's a good question here. Adrian said, can you still buy real Bitcoin? If you're buying it through an ETF, you don't have a key, right? It's through your broker. So it's not the same, correct?
Yeah, that's exactly correct. Not the broker in this case. The keys are by the
Mhm.
by held by the custodian, right? So the broker is the entity
Mhm.
that buys it for you on the market, on the exchange, for
Okay.
example. But the custodian are the entity that actually holds the
Okay.
asset for whoever has the right on it. The if you buy, for example, a certain number of Bitcoin, and the custodian will keep that safe for you. You don't and manage everything around it, meaning all the keys, and your house can burn down, but that doesn't mean that your Bitcoins are gone, because that's what custodians are for. um, and typically a custodian only has one job, right, which is hold, safeguard the asset. So it will have, it's like investment only. There's special investment vehicles which are only specifically foundation, things like that, just to keep the investment safe, and that's it. They don't do anything else. They shouldn't be doing anything else, right? So they don't have a business operation on the side, which if anything happens to the business, it's a risk for. No, that's the custodian is just to um, keep safe the asset. And this is something that's done all the time in other asset classes as well, right? Who holds the assets? Now there's always
Yeah.
a custodian,
There's
and typically
right.
an investment bank has a specific entity completely separated from the business operation, which functions as the custodian, right? Just to
Okay.
segregate the assets held in custody, compared to the assets of the company, right? The broker, etc. These are
Mhm.
well-known market practices to keep things safe. So on an ETF,
Mhm.
you have the same principle applied to Bitcoin, and that is a very good thing, because it allows mom and pop to invest in Bitcoin. They go to their broker
Mhm.
and they can buy the ETFs. They don't have to know anything about
Mhm.
blockchain. They don't have to remember the password or write it down or have it encrypted. Or there's no, not all those risks that come to with holding Bitcoin, um, you know, in your own wallet. And there are different types
Mhm.
of wallet as well, but I'm not gonna go into those details. I'll let those for
Yeah.
Dirk to talk about.
Yeah, he knows a lot about it too. Yeah, I guess this is Maya's comment is just I think it is very daunting, and it's well, also I've been busy doing other things, but it's just very daunting. So I really appreciate your answers, Victor, and I really hadn't thought about doing a Bitcoin ETF through my regular broker. I mean, I can just that seems pretty easy. So maybe that's more manageable. And for some reason, I don't know, Victor, I just don't trust Binance, and never even heard of these other two. Would you use something like that? I know, again, it's not financial advice, but just curious. Are you comfortable with Binance?
I'm well. The thing is, first of all, these brokers, um, you there are a couple of things. This topic is quite wide. One of the things
Yeah.
that you want to be make sure is that these brokers are well regulated. Why do I say that? Because the how do you know that a broker actually has is keeping safe those assets that you're buying, that you're buying, or that they're telling you that you bought through them? How do you know that they're actually there, right? We I don't want to be scaring people off, but I mean, just look at the news, right? Sometimes there
Right.
are some rogue participants in the market that they're not complying to what they should be doing. So you want a broker to be in a well-regulated, a heavily regulated area. I know it sounds the opposite of what you want, but for your safety, for consumer safety, you want that. You want regulation. You want, these brokers to be audited periodically, for example, that their balance sheet, that the assets are actually held where they say are held. Not only that, but they're also segregated, that there are no commingling of funds, for example. So the asset that your assets, your hard-earned money that you're buying, whatever asset that you're buying, in this case crypto, that they're not commingled with the funds of the company, right? That's a mortal sin. You don't do that, because that's a risk.
Yeah, unless you're a bank, right? So I don't think I don't think it's ridiculous not to trust financial institutions to some degree. So,
Yeah,
or to be wary of it
yeah,
anyway.
you have to be critical. You have to be you don't have to be easily trusting anyone or anything. You have to do your due diligence and check, how are these things organized? What is the infrastructure of these exchanges? That's one thing. So segregation, but all the things that they have in place, they tell you they have insurance policies for the case of whatever happens. They have segregation, but all of the things that they tell you that they're doing to keep safe your money, your assets, who is controlling them?
Right.
Who is audit? They can tell you everything, and maybe they are doing it, but how do you find out if they're not doing what they say they're doing to keep your money safe? That's where the regulators come in, right? So they make sure they audit these things, and they make sure that whatever is supposed to be in place, there are no unfair or dishonest practices, right? So they cannot say I do something to keep it safe and not put it into practice, because that would be misleading, and that's not allowed, right? So on a well-regulated area, these are you want to have these entities in well-regulated areas where there's transparency, there's auditing, there's all kinds of safety measures that make sure that you are that your funds are safe, or as safe as possible. And Trust Wallet, I'm not sure
That's
what.
helpful, Victor. Thank you so much for sharing all that with us.
Yes, and the best thing on one side is, it's a depending on your sophistication on the topic, the best thing would be to you be the custodian, or you're not a custodian, you're actually the holder, the owner and the holder of the assets, meaning you have a wallet that is completely in your control. You're the only possessor of the keys and the assets, but that brings other risks with it, right? What say, how about I forget about the key, or I lose it, or my house burns down? I mean, I don't want it to burn down, but houses are burned down all the time.
Right.
That's something that could happen. I could imagine something happens to me. We're not immortals, right? Something happens to me, I might be the only person who knows how to get the keys.
Right.
I mean, people are all the time, things happen to people that they're not able to act anymore. I'm not going to say any details, but I mean, whatever that may mean, just think about it. That can happen. We're not immortals. So what happens if you have your whole life in your whole portfolio, or a big chunk of it in a way, in a wallet that you think is super super safe, but something happens to you, and you whoever is supposed to get them are not going to get them. So that doesn't make sense. So you have to think about these things when you're thinking. This is also part of risk management, right? Thinking about everyone should be replaceable, right? I'm in no rush to go anywhere, but I'm thinking that way, that people, things happen to people all the time, and there's no guarantee that we're gonna be here tomorrow. So obviously I'm planning on becoming over 100, and I am. But that doesn't take away that I can't guarantee it. So I need to put things in place that even if anything happens to me, my families are well cared of, even in the event that I'm happen not to be here anymore.
Well, that's excellent, Victor. Thank you so much. Between you and the chat, I'm definitely encouraged to look into it and add that to what I do, I guess. I'm not super excited about it because, again, it feels daunting, but that was really helpful. And I'm seeing in the chat there's a lot of questions about Jonatan. And where is Jonatan? He will be back. He's coming back. I don't know that we know what day he'll be back, but he'll be here.
Actually, we have to invite everyone to hit the like button, subscribe to the channel. I'm trying to do this in a little different intonation. But we have a giveaway coming in, right? Check the comments, and there's going to be the draw will be on Thursday for the giveaway. So don't miss that chance, and hit the like button so we can offer you more on the giveaway activities. Let's see. So I think that the topic is quite interesting, because we talk about trading all the time, right? This is a trading channel. That's what we're supposed to be doing. But what do you do with profits? How do you handle the profits? What do you do with the bag of coins, money, whatever you accumulate once you are profitable for some time, right? That's perhaps just as important as gaining the money or gaining the wealth, is maintaining it and keeping it safe, right? We don't talk too much about that, but it's just as important. Yeah, wealth protection. That's it's not as deep and perhaps not as exciting as trading, coming from a trader that is saying this, but still it is super uber important to understand that you're responsible for not only getting there, but also maintaining whatever you have worked for, whatever period your career as a trader.
And I love that you made a distinction between trading and investing, because they are different, right? They are different things, they're different goals. And especially sometimes we get really young viewers in here. For example, my son is now 15, about to be 16. And about, I think it was 2021, so 4 years ago, he was really interested in trading and investing, and so we bought some stocks together. And boy, it's amazing how 4 years can fly by when you're not, when you have the mindset of, this is a 10-year portfolio, we're going to watch it casually, but nothing happens really for the next 5 to 10 years. I mean, we kind of manage it a little bit, but it's amazing for all of us, no matter what age you are. 5 years can go by in a flash. And so that is one regret I have with crypto, is not acting on it sooner. But hey, it's, now's always a good time. Maybe not to go all in on crypto. I think Dirk was a little bit potentially bearish in the future on crypto, but if it's a long-term hold, that kind of changes things. So
that's my the reason I'm investor in Bitcoin and not so much of a trader, because I understand that it's a very young new asset class that is becoming mature, and in some ways is already has many aspects of being a mature asset class, but it's not there completely. And track record only goes till the beginning of Bitcoin, which is in 2010, I think, or something like that. and it's it's not as established as all the other asset classes. So you need to take it with with more cautious, I think. And especially if you're talking about, I mean, if you're just investing a few thousand, that's you still have to make sure that you're doing it properly. But it's a different thing when you're doing some more some more figures. So you want to make to take that all into account and make sure that you're not blinded and following the hype of the moment. Not saying that Bitcoin is, but you gotta see for what it is. It's still very new, very young. And how do you the unknowns of something that is new is much bigger than the unknowns of something that has been here for many decades or century. Actually, S&P, the equity market, although it's always evolving and changing and fluctuating in different market conditions, we've been through so many cycles, we have been through so many things, and there's still unknowns there as well. But the unknowns from, let's say, the equities market are more, we have more data on that than the unknowns of the crypto. I'm not discouraging anyone. I think crypto has a lot of potential, crypto in general, Bitcoin especially, and many other coins as well. But you want to take into account that the fact that we have less data on it, right? So you have to trade it with a bit more caution. And that is why the reason why I'm an investor, long-term investor. I don't, if Bitcoin goes to 50 tomorrow, that's not going to affect me too much, in the sense that I'm more interested, where is it going to be in 10 years? If in 6 months half the value goes away, that's, to me, that's just a buying opportunity. If nothing changed for my perspective long term, that's just a buying opportunity. I'm going to be, actually perhaps doubling in. So, changing your perspective in terms of expectation and the holding duration makes the risk much more the volatility and the risk that comes with it much more manageable. I don't look at Bitcoin what level it is. Since I'm not a trader on Bitcoin, I don't trade Bitcoin typically. Although, I just said, if it comes here, I might, momentarily trade this. But it's not something I trade constantly. So if anything happens to Bitcoin, to me, it's just fine. I'm more interested in 5-10 years from now, or so.
Yeah, and that's a great policy, especially like you said, as an investor. That's kind of the mindset you want to have anyway. And you touched on another hesitation I had, which is the technical side of things. As a trader, I'm fully technical. And like you said, there just isn't, or hadn't been. I was surprised to hear that Bitcoin's been around for like 10, 15 years now, but there hadn't been as much technical data as there is in other places. So I think it's, more and more is definitely something that I want to think about and look at. And Victor, there is a request for Euro USD if you want to pop over to Euro USD and take a look at that.
Sure, I will do just that. I was going to say something. Someone said something about cycles, right? Bitcoin or crypto having cycles, and that I can still do, right? So massage my position trading, position trades, depending on the cycle, right? So if I see we have a huge run and I can look back, it's been, I don't know, 200% or 300%, and that is something that he has done in the past, I might sell a little bit, right? And if it's, as I said, if it goes to 50% retracement or something as deep as that, I might consider add some more. But that's I see that investment, because we're talking about here months, if not years, not day to day, not even week to week. So that's still, to me, consider things that I do as an investor. Same thing as we do with our portfolio, right? Our equities portfolio. I might add something here and there, adjust it from time to time, but that's going to be perhaps once a year, twice a year, something like that. Very slow, turtle like, very slow, in action, because that's that's an investor. Investor is typically much on a different time frame in terms of the speed than a trader. And trader, we're taking decisions within the seconds sometimes. I scalped this morning. I had an 11-second trade. Right, that's something normal. As we're scalping, that happens. But as an investor, at least to me, I'm looking to hold things for years, not months even. So that puts things into perspective, and that also gives an idea how how fast and how often I take decisions on those assets, on those positions, those weighing I have on the portfolio. They're very slow, and very seldom, basically infrequent. All right, so let's go to EU. Right? Was it EU or GU?
It was,
Which one?
yep, Euro USD EU. Before you hop into that, I just want to touch on this comment here. Is anyone trading in, anyone using supply and demand? Please tell which RR is ideal while using it. Well, Victor's getting his chart set up. I can talk about this. There's a really, really great course. When I first started doing funding challenges myself, I came across Gil Ben-Hur's course on supply and demand. And it was a game changer for me, in particular with regard to funding challenges. So you can find it on the Fiverr's website. It's totally free. You can find it on YouTube. Just search Gil Ben-Hur, supply and demand, and it's excellent. It's been a couple years since I've watched it, so I can't remember. I think it's like 3 or 4 videos. I had to watch it multiple times because there's a lot of nuance to what he's doing. And I wanted to really get a good understanding. So I highly recommend that course. And that can, we talk about supply and demand from time to time. I built a strategy around using supply and demand, and it worked really, really well for funding company challenges, especially if you're in particular Forex. It was really helpful, but it works well with indices as well. And then as far as which IRR is ideal, I think Maya kind of touched on a potential answer to discovering that. But one thing I will say about risk reward is that there is no right answer. I kind of obsessed over this for a bit, thinking there had to be some kind of solution for how to solve this dilemma, with math, and thinking through it that way. And basically what I came up with is I wasn't sure at the time. But there are other reasons why there is better than others. So when you're looking at math, basically the higher your win rate, or the lower your risk reward is, the higher your win rate is going to be, and vice versa. The higher your R multiple, the lower your win rate is generally going to be. But there are a couple things, including compounding and psychology, that make a lower risk reward to be often very beneficial. So Dirk showed yesterday, I think he was using a 1 to 2, and he even talked about maybe like a 1 to 5 or a 1 to 8. When you have small wins like that with a high probability setup, if you can come across a high probability setup and you're just taking little pieces, your equity curve is going to be nice and smooth. So if anybody remembers back to when LJ won that competition, I wish we had a screenshot of it, Victor, that we could show. But if you looked at his equity curve, he actually went down first, which I thought was really interesting. He went down first and didn't shake him at all. He was slow and steady up. And because of how smooth his equity curve was, it's pretty clear that he was taking profit pretty quickly and just repeating the process again and again and again. So he's found some type of high probability setup that he knows he can take over and over again for these small gains. And because he was doing like that, his equity curve was nice and smooth. He didn't have to recover from big drawdowns. That, if you have a lower win rate, not that you would take an outsized loss, but you're more likely to take a loss, right? So you tend to have drawdowns, and then eventually you get a big boost, and then you'll have drawdowns and get a big boost. And in a lot of ways, taking a small risk to reward, you get nice and smooth, and there's a little drawdown, nice and smooth, little drawdown, because the probability of you hitting your profit target is going to be higher. Psychologically can also be easier to have a lower risk reward because you're taking wins very often, and your losses don't come as often. So mathematically, it's the same, but those are some things that I hope you will think about, knowing that, of course, there is no right or wrong answer. When I started investing really, I learned from, I was really into Investors Business Daily, William O'Neill, and he would very often take a 1 to 3 or talk about taking a 1 to 3. And then he also showed examples of, just like huge R multiples, huge R multiples. And I don't think that's as beneficial. Obviously, it works. It worked really well for him, but I don't think that's as beneficial to what we're trying to do typically as day traders or shorter term swing traders. So those are my thoughts. Victor, do you have anything you want to add?
The question about the different risk reward ratios. Where was it? That's a
Right.
different comment. Which lets me check which one. Maya, right? Maya had it. The thing is, there is. I hate to say this, but there is no one single best for everyone. The best way to do that is to, because for each strategy, the most profitable equilibrium between risk reward ratio and win rate will be different. It will change, it will fluctuate, it will change depending on the strategy. And also, what you touched upon, the adherence to the plan will be affected depending on the risk reward. Because if the risk reward is too high, meaning if you're risking and you're expecting 10 times or 20 times or even more what that with which you are risking, meaning a high risk reward ratio, it means that your win rate will be very low, and that will have its repercussions on your psychology, just as like you said. And so, even if it is more profitable, the question is, will you be able to capture that edge? Because probably you would break down psychologically or deviate from the plan in any case before you actually get those big winners. So the best way to, there is no one single answer. 1 to 2 is always better or whatever. There isn't. What I can tell, so there is a way to find the optimal, and I say optimal, but it is optimal risk reward ratio. The way to do it is to have a strategy first. So you don't look first for the optimal risk reward ratio, and then you apply it to the strategy. No, you start with your strategy, you build everything around, and have every rule as rule based as possible, every part of it as rule based as possible, and then you run optimization based on profitability as the result, looking at different risk reward ratios. Like if you have, for example, this is a very great example. Let's say you have, we're going deep here. We're giving education right here. People give that button some
giving all our secrets away.
Hit the like button. If you don't want to hit it, that sounds a little bit rude, then caress it with a click. That's fine as well.
Gently tap it.
Gently click it. That's fine by us. As long as you hear a click, you're good to go. All right. So one of the things, very, very simple. I'm not going to make it this, although I always say this and I end up talking a lot anyways. But let's assume, like, I go from my point of view, right? So I breathe and consume and talk and inhale order blocks and quasi all the time. So I'm going to be using something that's close to me, which is, but this can be any structure, any concept, any indicator, anything that you use that allows, that is part as a component, or is even the basis of your strategy, right? That can be anything, right? So doesn't apply only to order blocks. But let's assume that your strategy is, right, the order blocks are created by a point in time where one side to control, right? So you have a bearish candle for a bullish bullish order block, a bearish candle that then creates that engulfing, right? What's that? That's that's a point where the market, the buyers in this case, to control, right? So you take the order block, and in my case, I wait for a couple of, the details of the strategy is not important because it's only an example. But in my case, I take, I have some rules, how much I wait, and in what moment I can trade back this area for this continuation. That's basically what I'm looking for. This is the most basic motor unit, if I can call it that, functioning unit of my strategy. So okay, so that's fine. Now, assume you have a strategy. Let's say in this case we have this strategy, the retest of a order block, whether it's fresh or not, and how we define that, that's beside the scope of this this piece. So that is the move or the phenomena, the pattern that you're looking in the market. Now the question is, where do you get in? Do you get in as it is coming in? Do you try to get in as deep as possible in this case the order block, right? And all of these things, they will change the risk reward ratio, because if you're waiting for something to go much deeper, that means that the invalidation, and in this case the invalidation, right, the invalidation will be at the end of below that structure, right, the reason, right? So wherever, if it's much lower or much deeper, much closer, that's up to you, but invalidation needs to be below or beyond the structure. So, but where do you put your end? So the rule, for example, about the entry, do you get in earlier, or do you wait, for the last turning point, or the how sensitive are you with the entry? That already can change the risk reward, because the stop where the setup is invalidated is roughly the same place, no matter if you get in a little bit earlier or a little bit, closer to that turning point. That's one thing. So in the entry already, you may have some variables that can change the risk reward ratio. And then you have how many confirmations are you looking for? Are you looking for confirmation that are typically lagging, that you're gonna getting in much later? Same thing. This is still entry part of the thing, right? Or are you more are you looking for signals or confirmation that are not as lagging, not as that are more sensitive, right? That changes the win rate as well, because if they're not sensitive, they get triggered more easily. But they get you better entries more often, but the win rate will probably be a little lower. So once you have these variables, you can run optimization process, right, where you try out different variables, different values for each of these variables, and look for where do I get the highest profit, right? I'm just only talking here about the entry variables where you have your system on. You can also apply this to, let's say you choose one entry, right? So one type of entry, one type of confirmation, that's clear. You're not changing, you're not accepting it as a variable anymore, but that's a fixed given in your system. Now you start, okay, where do I put my target? Where do I put my TP? What you can do is the same thing. You run optimization of the TP once you have all the other things already fixed. They're not variables; they're constants in the strategy, and you run this with different types of risk reward ratios and see which one gives you the most profitability. So you're optimizing for profitability, and that changes, right? Let's say you get when you optimize. I'm gonna do this. These are the things that we talk about when we do our workshop on Discord. For those who want to see more of that, join us Discord. But while you're doing that, hit the like button on this stream. show us that you want us to explain these things on YouTube as well, not only in the workshop, by hitting the like button. Because if you do, then we might do this more often. But if we don't see any reaction on the likes, I'm gonna assume that maybe you don't want me to do this here, right? So that's your way to communicate with us, hitting like button. Okay, so let's assume you do this is on one side, you got profitability, right? So this is the profitability, right? On the y-axis, and on the x-axis you have risk-reward ratios, right? So different risk-reward ratios. So RR multiples, right? Risk-reward ratios. There you go. Right. So this is let's see. This is perhaps 1. I'm gonna put it very quickly because I know, instant gratification is gonna kick in anytime now. For those watching. All right, so that's number 2 and so on, right? So these are the ratios. So you're looking for 1-to-1, 1-to-2, 1-to-3, and so forth. And you're not changing anything before I was explaining about optimizing your entry, but now you're optimizing your TP. Basically, what target, what multiple you're looking for, how does it change my profitability? And what you might find is that, at 1-to-1, right? If you're doing 0, there's no profitability there. But if you're doing perhaps a negative, you'll see perhaps maybe some profitability. It's going to be there. And if you're using 1-to-1, maybe the profitability is here, and you keep increasing it 1-to-2, maybe it's still going up. But if you start aiming for more than that, it's going to drop again, right? Something like that. So what you're doing is you're building basically a curve of the optimization of that profitability, where you have the risk reward ratio as a factor, or as a variable, I should say, that you're optimizing for. And what happens, you will find for your specific strategy, you'll find that there is a optimal place, there is a optimal risk reward ratio for your specific set of rules. But that could be, okay, so maybe it's somewhere around between 1 and 2 and closer to 2, maybe 1.5, 1.75 is a great area, and you can play around with this. And this is something you can find out right now with your strategy, if you have the data, of course. But if you change the rules, that equity curve, that optimization curve will change. The optimal might no longer be there, but maybe the optimal, the curve might shift. Let me change this like so. It might shift. Why is this happening? All right, there you go. Now it might shift that the equity now has another place where it is optimal, right? Meaning that the risk reward ratio, this would be the best place to be looking at, right? This is valuable information for your strategy. A lot of people are talking this or that, but this is the data talking. There's nothing more closer to the truth than the data, right? Having good data, well collected, not any data, not with impurities, right? Pure data where if you follow consistently your strategy, and then you do this on a good sample size, meaning at least 25,000 times. No, I'm just kidding. But a good sample size, and then you can get to these conclusions and have data-driven conclusions, and be a better trader just by using statistics. Nothing too fancy here. Once you know what you're doing. I'm sorry if that is too much for those who want instant gratification. I know it took a little longer, but I think
it's hilarious, Victor, too, because your answer and my answer, again, we're spectrum, right? But it just shows there are, I hate the expression 100 ways to skin the cat, but that's exactly what we're demonstrating.
Exactly.
There is no right or wrong way to do it. These are multiple options, and profitable traders do these things in all different kinds of ways. So super interesting.
Yes,
it's fun to hear other people's process. So
yes.
Appreciate you sharing.
No problem. On point. Yes, indeed. There are so many ways to be profitable and to find your way as a trader. And what I explain and what I say I may come over as completely convinced that that's the only way, but obviously it's not. That's just my way of
Yeah.
doing it. And
Yeah,
if it
that's
resonates,
exactly it.
if it resonates with you, then by all means try it out. But if it doesn't tell you anything, it doesn't make things clearer, then maybe it's not for you. Maybe you should do something else. Try some other trader, maybe someone in this stream, maybe someone who just changed position on the stream, to check for check. There are many ways to do this. This is not the only way. And but yes, let's
Did
see.
I do that? I don't know. It just
I did it.
automatically happened. I
No,
didn't
I did it. I was doing it to I was doing this to to indicate you, to point towards you without saying your name.
There we go. There we go.
Someone gave me 10 hub credits for, I suppose, for the explanation. Thank you. I'm gonna send
Oh,
you
wow, how nice.
I'm gonna send you,
I didn't
Manish, my email, my hub account email, so you can send them to me. How good of you. Yay. Thank you for those nice words, William. That's why we're here. We are here to help you in any way we can. This is not financial advice. You have to do your own homework, your own due diligence, right? Because you have to own your steps. You have to take responsibility for them, right? I'm not going to be held responsible for your losses, but I'm just showing we are showing you different way of doing things, and it's up to you to use them.
Yeah, and if it's not working for you in the beginning, it's okay to give yourself some grace and understand that um, it takes a while to figure all this out and to put it all together, and repetitions are really what makes the difference. So if this seems too daunting for you wherever you are in your trading journey, take what you can from what Victor or from what I said, and take what you can, try to utilize it the best you can, try to make an improvement, but just know that it is a long-term process, and it takes a while to get your own, discover who you are as a trader, and to get to arrive at your own, I want to say destination, but that's not even correct, because I feel like I'm still evolving as a trader. I'm not sure how you feel about that, Victor, but even if you're not changing your process necessarily, you're still growing and developing. So all right,
Absolutely.
here's a question for you too.
Absolutely. Richard asked, can I get a video to explain order? I actually have one on the channel, and I'm actually also working on one for the ABL community, right? But it's not ready yet. I'm working on one as well, one for quasis on the ABL. So, but I already have one. Maybe I'll check to see what the where the link is. Let's see. It's perhaps it's order blocks 101. We could call it. I don't see it quite quickly, and maybe I should maybe have it ready for next time. Otherwise, let's see if I can find it quickly. All right, I got it here. I'm gonna share it in the chat as well. We shared in the chat as well a um, a link for the Ben from Gil.
I put it in there. It's
exactly.
Oh, of the order block? No, it's a little bit further up. If you scan back a little bit, I spelled out his name. Here we go. I don't know if you're gonna be able to copy and paste that link, but I went on YouTube and I just searched Gil Ben-Hur supply and demand, and it comes right up. So you can easily find it on YouTube or the Fibers website.
Perfect. Yes. So yes, I also actually I didn't put in any names, but I will do that right now.
Oh, here it is again. Yeah, thank you. Here's a great question from Born in 2944, and it's a little hard to answer this for me personally. Maybe Victor, you could give a better idea, but I have a variety of accounts that I trade with different goals and purposes that I use them for, and so it varies. some accounts I'm only taking 1 trade a day. And some I'm more active. So I think that kind of varies. What about you, Victor?
Yes, it depends on the strategy, right? And the numbers on the average number on any given account is what kind of combination of strategies are being copied to. Because I have automated strategies, I have manual strategies, and not all of them are copied to all the accounts. I know it may not be as clear, but that's the truth. I have one master account for my manual and one master account for each strategy, and they are being copied to all the slave accounts, right? So prop accounts, personal account, etc. So it depends on any given account. It depends on what master are they connected to. But on the strategy that I talk about and that I trade all the time, I take about 70 to 90 trades a month. Okay, but it depends. Sometimes it's less, but roughly 70 to 90 a month is fair to say. On my scalping strategy, I could trade all day, basically, scalp all day, but obviously I don't have that time. I trade between 10 to 20 times, usually. And if I have more time and the market, offers me the opportunities, it may be sometimes 30, 40, 50, but usually it's around 15, 20. And on the other strategies, my other strategies, for example, the one that I'm currently, let's see, one strategy, I am actually expecting a bounce on EJ, and I'm, because of everything I explained earlier about 2 hours ago, about the fact that we are within a weekly, a daily, etc., multiple confluence. That strategy is based on volatility, and that takes about 20 trades on average per day. So it varies. What can I say?
Mm-hmm. I have a it's about 9-month public track record. I just looked through that. You can search on my Twitter account and you can see it if you're interested. And I just kind of did a quick little tabulation on it. It's roughly 12 trades a day, but I was more heavily trading earlier on and like tapering off. So I think, like Victor said, it really just depends on what your system is, and how often you get a signal or how often you get a setup, whatever it is that you're using. And then also the goals of the account matter, right? So there might be a reason that you over time might change what you do and why you're taking as many trades as you are or not. 40 trades a month. I think for a prop account, for a funding firm account, there is some reason to maybe take more trades. This is just me thinking out loud, taking more trades in the beginning, and then once you get funded, it kind of makes sense to taper off a little bit. That's a way that I often will do things.
Okay. Yes, you can do the same thing as also with the trade size, right? So we can, what is also something very often done is that you risk more than perhaps you would long term. You risk more on the evaluation, and as you progress through the evaluation and the account becomes more valuable to you, you start lowering the risk, and once you get to funded, you bring that even much lower to a level that is sustainable long term, right? Because you want to evaluate, you want to proceed as safely, as responsibly as possible to, but also as fast as possible to the place where you're funded, so you can allow yourself just a little bit more risk, but once you're funded, then you want to be making sure that you're as safe as possible, and speed is no longer an issue. You just want to be safe and keeping that account, and one way is to then lower the risk, right? That is something to be considered. Actually, on EJ, let's take a look for those as a follow-up on as a follow-up for the the setup that I explained a couple of not long ago, and it is we have a daily quasi, which is right here. We're going all the way through it. We went all the way to the lower lower border of it within a weekly outside bar, a bullish order block created by an outside bar, meaning we expect a push higher from this structure. And if we go lower time frames, you will see that we also have this order block actually on the H4 did not materialize. All right, so that means that I'll have to, okay, so we do have an order block on the H4, which is based on the quasi. That means if we go to the H2, we don't have a reason yet on the H2, but we do have on the H1, right? And so we get to our area. This is the area that I'm interested in to take another trade, right? And I say another because I'm already on a different strategy on this trade, right? This is the area. That's the area that I'm interested in. And I want to let the market show me the money. For those who were here yesterday, give me that confirmation that it wants to reverse, because it already gave us the first indication, which is this, right? It created that bullish engulfing candle, meaning it's trying, that's its first sign it wants to go higher. But do we get a retest and a follow through? And if we do, then I want to be part of it, right? So that means that I'm going to be going deeper into this area. Actually, let me check the ATR on today's move. Let's see, how is that stacking up so far? 105.1. And what's the ATR currently doing? It's doing 118, meaning we still have on average about 13 pips. So keep that in mind. It can still go a little bit lower before changing. 13 pips from current levels, that would mean, let's measure that, right? 13 pips, that's going to mean something around 71.14. And all of this can still happen without invalidating the setup, right? So it might at some point get to this level and then come back and have your reversal. So something you could think of is, let's say on whatever time frame is suitable for you, maybe it will break this down momentarily and then come back and perhaps have that kind of reversal, or maybe it's not going to reverse as well. Gotta keep your not marrying the trade. If it doesn't react, then don't force the trade. But this is the area on the 5-minute that you want it to respect and change from. And if it doesn't respect that close on the 5-minute below it, then you can go on the H1 and use this area. As long as it doesn't close below it, maybe it's gonna go there, leave a wick, and maybe even go there again and do this on the hourly, never closing below that area. And if it does that, you can take a trade because it's at the end of its, the ATR. And if you get, these things happening together, you have multiple time frame telling you this is a place where buyers could get in, and you see in the lower time frames that reversal pattern emerging, meaning buyers are getting in. That's a very good probability trade to get in, a probabilistic trade to get in, because there is a good chance it's actually indicative of a reversal coming up. We never know in advance. It may not happen. Not all reversals are going to be successful, right? So we don't know in advance which one will work and not. We can only select and filter the better ones among all of them. That's your job as a trader in the end. Let's see. Every rose is not a flower. What's the logic behind that? I'm not sure I got that.
I think it might have gotten
the sequence.
Here we go.
It might have gotten the sequence in order. Yeah.
There we go. Here's another comment on Bitcoin, Victor. This would be your expertise, not mine for sure. Sounds like Bitcoin might be moving some.
Okay. Well, we can take a look. We stayed on the higher time frame where we have that consolidation after the break breakout. Crazy Mysteries has a bit. BTC sell is good now. Well, it depends on your time frame. If you're on the higher time frames, of course I see we could have a bit of a retrace into some retest of some broken lines before we continue, but that does not always happen, right? Sometimes it just continues without that retest, and well, you can, if you have enough confluence for it, you can surely do it. There is, if you're looking from the sell side, there is an almost outside bar here, which is interesting. Almost outside bar. I say that because let's zoom in with precision for someone who doesn't like precision. This is the low of that candle, right? And it did not close below that low, so it's almost an outside bar. Okay, so but it's still there, and it has, even if it's almost an outside bar, it's still meaning there is a lot of selling pressure there, and that order block, which even if it isn't an official order block to me, I can still identify that area as a place where sellers have a supply area basically. So if we go lower time frame to see if we actually, let me leave that in its place for a little while, meaning on the daily. Let me leave it there just for a little while, and then let's go to the lower time frame to see if we can spot some kind of a bearish reversal. I don't think I want to be in this trade, to be fair, because you're going against momentum. You're going against the market. By this price action has given you clear signs that the buyers are in control and they're holding their place quite nicely, right? I don't see, they held this range nicely. That's a sign of strength, not of weakness. So as long as you understand that that's the bigger picture, and even though you may get a signal go short, that the probabilities are not great to be shorting this, and as long as that is clear, then and you tested this, then you can for sure take that as a trade. Right? This is the little quasi there. Look at how beautiful that quasi worked. This is the quasi. Gonna show you guys. That's the higher high, higher low. Goes break the neckline. That's the lowest point. It comes to where? One, not just the only one, but one of the order blocks before going to the target. Beautiful. Isn't that beautiful? It feels like, I don't know, it feels great when I see these patterns emerging and completing very nicely. That's something, but that's already completed. So I don't see, there is a second shoulder, according to me, and that second shoulder is right there, and it didn't touch it, and my rules say it needs to touch it, and even if it had touched it on this time frame, it did not tell me that it reacted. So on the H4, in any case, I don't see a short here. There's a gap that was closed. That to me is, I would actually see that more of a bullish sign, right? It opens, it gaps up. This is, of course, it's not an actual gap, because I think the Oanda price feed is it in the weekend? I think it's not. So the gap is not a gap, actually. It's just the weekend. The price feed stops, but Bitcoin has a price on the weekends. So actually, what I said about this regard, what I said about the gap, there is no gap. It's artificial. But in any case, I don't see a short here. I'm sorry. This area I could still consider. If I see more reasons for weaknesses here on the lower time frame, perhaps, then I could get in a signal, get in a short, but very conscious of the fact that this is a buyer's market. This is a bullish market. Ideally, I want to be long this. So instead of looking for short here, which is possible, perfectly possible, I would rather want to look for demand zones to get a long from, right? Or perhaps even these lower levels, if we come back and we can use a very renowned psychology trader that I know. I'm very honored to know. You could use the low, that low. Right, let's look on the daily time frame. Is it a swing point? Actually, it is. By the time they close it, if price comes back, perhaps this. You can use a strategy that a very renowned psychology trader uses, which is taking out the low and then for that reversal, something like that. But I would be looking for longs in any case. Yes.
Thank you, Victor. And I think Crazy Mystery was saying it's a 10-minute hold time. So
okay, so lower
maybe,
time frames. Okay, so maybe I should
super
go
low
okay,
time frame probably.
Let me check.
And Victor, you're stamping your quasi in everybody's mind. We all dream of quasis now, and our eyes are closed. We can see quasis in our mind.
I imagine a world where everyone goes to bed and they dream of quasis.
We can hear your voice and see the quasi.
Wouldn't that be a peaceful and beautiful world to live in?
Absolutely, absolutely.
Coming back to the charts, and by the way, as a little disclaimer, the fact that I, using order blocks and quasi, I have a tendency or a preference to look for longs based on market structure and all of that. That doesn't mean that I'm right. Take it with a grain of salt. That's just me looking at the market through one set of one method, which is using order blocks and quasis and my time frame and my holding time and everything that comes that describes me as a trader. And to me, given those things that I use, I don't see an entry short. But that doesn't mean that if you have a system and you see a signal and you have a confluence that you're looking for, your trade plan tells you to go short, who am I to change your mind? If you have the data supporting that, please follow your plan.
Absolutely. Well, Victor, we have about 10 minutes until the open. Do you want to take a look at the indices real quick?
I think I'm sure. Let's take a look at the indices. Would you like to do that?
Absolutely.
I think that's an amazing idea. What would I do without you?
Likewise, Victor. Likewise. Okay,
right.
I don't see my thing over here.
Yes,
oh, there it is.
I
got it all set. Oh, it's not
no
showing.
Problem.
Wait.
Yes.
Nope.
Let's see. How do I do that? It's offline. So I think you need to add. I'm gonna switch back to my scene. Probably you need to. No, are you using screen share for your?
Yeah, usually it just. That's not it.
Or maybe let's switch. Maybe we can do some live troubleshooting with the checking. I'm gonna switch back to your. Deanna, is this yours? Yes. Could you add your?
That is.
Could you add? I'm gonna add it. Can we just drag it?
When sharing a scene, anyone?
I am.
Well, we can figure this out later. Let's.
No problem.
Did I get it? No.
I'm gonna take it off. I think we were getting it off together or taking it off together, and instead of removing it, replacing it. Okay, so back, no problem. And we're gonna be looking at the equities. Maybe I can message.
We can look
Mike.
into that.
Yeah, maybe you can.
You can just put your chart up, and we can just talk about it for a second here.
No problem. Let's do that. This is another explanation we had on our workshop. Good things are being done there, where we talked about equity curves and trying to elevate our game. This is the S&P. This is the CFD version. So it may not be the same level. It probably will not be the same level as the actual index or even the futures. So just take that into account, everyone watching. But it's the same reflection of the actual S&P. So you just have to look on your chart where your levels are. But it's going to be, the structures are going to be the same.
And Victor, I'm going to be looking at my chart. So if I say anything incorrect compared to what you're looking at, just hop in and let me know. But looking at the futures chart, if we can start with the daily chart. So we had a breakout a couple weeks ago. There was a consolidation from July 25th. Started to try to break out a couple times, and then finally really started to break out kind of like the mid, second half of July, and then really launched out of that consolidation on July 23rd. And then pretty much, price was just a rocket ship higher, had a little consolidation on the 24th, more upside movement on Friday the 25th. And then yesterday we had a really a pretty significant gap up Sunday evening for me, but on to the weekly open. So price gapped up. I think it was like around 25 points or so. 22 points, I think it was. 22 points price gapped up over the weekend on some news that happened. And then after that, there was a little bit of an additional run up, and then basically price spent the entire day not only filling that gap, but dropped quite a bit lower as well. So yesterday was kind of a nasty down day, which presents a really good opportunity, right? Price needs to kind of go through these wave cycles where we see these corrections so that if you're trying to get long, you can get in at a better price. And traders were bearish traders were well paid yesterday, right? So right now we're kind of hovering around right below, just around the midpoint of the weekly opening gap. So price is hanging out there, and we have the open in about 5 minutes, and then another 35 minutes from now is jolts. And jolts can be a pretty significant volatility injection. So we may see price react to that. And then later on this week, we have quite a bit of high impact news events that will likely impact the indices, including FOMC tomorrow, 2 p.m. Eastern time, and then core PCE on Thursday and non-farm payroll on Friday. So if you look, by the way, if you don't have a spot where you get your news from, Forex Factory is my top choice. I've been using it for a really long time, and I just filter the high impact and medium impact news. And also I include the
Holidays.
gray folder news. Pardon me?
The holidays?
Yes. I use the gray folder news because although you would think maybe that's just news that isn't as important, that is where you can see the holidays that are coming up that will affect the market. So those are kind of the biggest impact events that we have coming on. But right now, price has kind of found a support around 35 on the futures chart, 64.35, and seems to be reacting around there. But it might make sense that price just kind of consolidates for the next, half hour until jolts is released. We have no idea, but that is coming up soon. And looking at the NASDAQ is pretty similar, had a little bit of a stronger close yesterday on that daily time frame where it was pretty ugly in the S&P, had a stronger close in the NASDAQ, and price is already back above all-time highs or at all-time highs again so far today. So it's maybe just a few points. This is the NASDAQ, so it'll be more than a few points. It's about 23.5 points below the all-time highs, but price did already poke above for all-time highs on the NASDAQ. So quite similar, but a little bit stronger than the S&P. And then the last one I want to touch on just before we get to the open is gold. So looking at gold futures, we had a discussion yesterday and Was it last week as well, where I think actually no, sorry, it was yesterday. I was on a couple times yesterday. So we went through various iterations of this conversation where we were looking at the daily time frame and price was looking to be pretty strong. A core setup that I trade where price dips below the previous day low and then pushes back higher. So it took out the previous day low and also a swing low from back on July 17th. Pushed above there and was sort of residing in this level above the previous day low, looking really strong, and that trade absolutely failed. So, no trade is a guarantee. Maybe if you took profits very quickly, you could have had a nice little gain in there. But you would have had to be really fast in locking in your profit and most likely were stopped from there. But since then, price is kind of consolidating sort of in like an upward trending fashion. For me, I would be for another setup in gold. Where it is right now, I don't see anything that is a setup for me. There might be for you, but for me, I want to see a little bit different price action from gold before I get back in. So those are the assets that I'm primarily looking at as we get into the open, and we have just a few seconds, about 20 seconds until we get into the open, and then, like I said, another 30 minutes until jolts.
And we have your scene with your charts on the
it came
screen.
back.
Yes,
Great.
we had
All
some
right. Thank you for
invisible
figuring that out.
hands helping us.
All right. Well, maybe they can send me a message and let us know what it's always just appeared. So I don't know what is different this time, but thank you to our backstage magic. Looking good. Okay. So here's the S&P. Here is this blue area is kind of the gap that is outlined here. And we have price kind of consolidating around this 35 level, right in sort of like the middle range of the gap. So now on the open, we're seeing a little bit of a push higher. Keep in mind, though, 30 minutes from now is high impact news. If you're trading the high stakes account, that can impact you, but it's fine to position ahead of time. It's just that you don't want to trade right at the news event.
2 minutes before, 2 minutes after, you're not allowed to open a trade on the high stake program. If you do, the profits will not count, but the losses will. So there is no point in trading within that 4 minute window, 2 before, 2 after, because there's no upside. There's only downside.
That's right. And it's risky anyway. Would you, I think if you want to do that with your own money, I wouldn't. I think there are better opportunities to position. Again, you can position ahead of time and you're much better off doing something like that. Because again, with the fivers, the cheat code with the fivers is there is no day trading requirement. You can if you find a position that you like as a day trade, maybe you take off most of the position at a profit target that makes sense, but then hold a small amount so that it'll continue to go further. Am I muted?
No. I'm just saying hi to the person on the screen. There, that person. There.
That lure guy. Nice fish. What kind of fish is that?
I have no idea.
All right.
But
I'm just going to catch up on some comments here.
Yes, the chat has been very active. We love to see that, all that engagement, all that back and forth between you guys, chatting, talking to each other. That's exactly what we want. But while you're actively moving your fingers, typing and communicating, don't forget, click on that softly or hardly, whatever way you want to do the clicking. But please click on the like button as well. Subscribe to the channel and make the world a better place by doing so. All right, Jonatan is no.
Everybody's been asking about you all day, Jonatan. They'll be so happy to have you here.
Yes, but I see. Yeah. So Jonatan is in the background, but that is something working the magic on all the scenes, on all the things that make the stream work. From the outside, it looks like everything is, magically works. But of course, there's a lot of people in the background making sure on a day-to-day basis that everything works. And all the credits to them. We're here, but we have a whole team behind us, making sure that everything is working, and we're grateful for that. Born in 2944. What would that 2944 mean? Is that
I always think about that too.
is that picture of who is in that picture, that profile? Isn't that the billionaire, the guy who broke the Bank of England? What's his name again?
In reference to 2944?
No, I don't think it is in reference. I don't know. Maybe it is, but it's I don't know. The name slips my memory right now, but I'll probably say it. I'll come to it in a short while. It's the one of the biggest traders of all time. It's in up there in the Hall of Fame, and has the nickname "the man who broke," or the trader who broke the bank of George Soros. Exactly. Isn't that the your profile pic? I'm not. It looks like George Soros, right? It is. I think it is. Let us know, Born. But anyways, doesn't matter. What is your nickname about? 2944. Maybe it means that. Yeah, maybe it does mean that. All right, let's continue. So we are open has already happened. The open is a fact. What can we say about the market? Do you see any?
I want to address this.
Mhm.
Yeah, here's a good question. So Chris Greenwood said, "I've just started intraday trading and get stopped out at 10 when market volatility is low. So I need to adjust my parameters, but any advice would be welcome." So I'm not exactly sure what 10 what time zone we're talking about, but one thing that I have found to be very helpful, I'm not showing it on this chart. I don't believe it's not on this chart. But one of the things that you can do is use an indicator called the ADX. And this is the average directional index. I actually use ADX and DI, but average directional index is fine. Whoops, let's put it over here. Oh, maybe I do have it on here. Let me see. Okay, looking a little weird here. I'm not sure if I have the right thing. Give me 1 second here.
No problem. Would you like me to switch to mine, perhaps, for some?
Well, I'm just not sure because I can't see. Here we go. Okay, this is ATR. So ATR is not what I want. Let's put it on ADX. And if you add the ADX on either this one here is a good one or this one here, depending on what you like. And if you use the ADX and you can draw a line, or I believe you can also set a threshold, and you put it at 20. 20 is a really great sort of threshold for when there is volatility in the market. So if you look at where we are right now, we're just below it. And that makes sense, right? Because we have jolts coming. It makes sense that maybe the market is waiting to see what happens with jolts. And that would not be surprising. And this works on all time frames. So let's get rid of this one. I also love the ADX and DI is also a really good one to use. That doesn't tell you about volatility, but it tells you a little bit about directionality. As far as making sure that you are trading when the volatility is good, ADX is what I would recommend. And you can see that across the time frames, it'll be different. So, for example, on the daily, you can see plenty of volatility over 20. On the hourly, though, it's a little bit low. So again, that makes sense. During since Sunday night, volatility has been decent. We're coming into jolts in 20 some minutes, and then also tomorrow there are quite a few high impact events, including advanced GDP, and then pending home sales just after the open, and then FOMC in the afternoon, or in the afternoon for me, a little bit later on in the day. So we might see ADX start to pick up after the JOLTS release. Or price might just continue to be a little bit slow and lackluster. So I recommend the ADX. It's a great tool, and it can keep you out of the times when there's nothing really going on in the market. Sometimes it's easy to think that there is, right? To want to be involved whenever you're available. Guilty. I've been guilty of that. But the ADX
Guilty
can kind of help keep you on track. Pardon me?
Guilty as charged.
That's right. Right. And this is a really good tool to make sure that you are trading or playing at the right times. You don't want to be there when nobody's at the party, right? You want to be there when the party has started and things are moving. That's how we make money as traders. At least most of us anyway. We need price action to be moving, and it's fine to position ahead of time. That's a strategy that I try and employ. Position ahead of time and then wait for the trade to play out. But again, you want to make sure that there is some activity in the market before you're getting in. So for example, if you would have gotten in, let's say you were able to get in back here, that would have been a time when ADX would have been above that 20 threshold. But right now at the moment, maybe price is waiting until JOLTS comes in. So I hope that helps. I find that to be a really helpful tool, and I hope you do too.
Yes, and the NASDAQ is breaking out, continuing its path upwards. Maybe, do you have it on your screen? I think you do. That's S&P. Maybe we can show the NASDAQ as well.
Yeah, we can look at the NASDAQ. And the NASDAQ is now breaking out. So this is all-time high here. This is all-time high territory. The NASDAQ has been stronger than the S&P. So that's what I was saying yesterday. You can see that this candle here is much stronger than what we saw in the S&P, and already the NASDAQ is at all-time highs. If you compare that to the S&P had an ugly day yesterday and is still below the all-time high level, which is now up here. Up a little bit further. So it's at 38 right now. All-time highs are 57, 58. So about 20 points or so to go before price is back at all-time highs in the S&P. But the NASDAQ is already there. So could be a situation where, of course, we never know what's going to happen, but where I don't like this expression either. You've heard of like slow sister or something like that. It's lagging behind the NASDAQ right now. But the NASDAQ is taking off, and you can watch that and see if we get continuation higher or if it drops back into the zone.
Yes, indeed. Let's take a look at. Are you at any trades on the NASDAQ, Deanna?
I have trades on the S&P. So I am long the S&P from yesterday, and actually overnight I took a trade. So I am still holding some of those trades. Some of them have taken profit, and some of them I'm still holding.
Nice. Coming back to, maybe I can go through the setup or the opportunity that so I'm gonna switch to my chart. That's okay with you, Deanna, with your permission. Let's see. This is EJ, right? Euro yen, and the reason that I talked about is that we have, very interesting. We have on the higher time frame, we have reasons to go short. From the data from the left, we have an entry order block on the weekly time frame, and we are here indicating, it hasn't closed yet, we're indicating that currently that we could get a weekly signal, right? This is, the price action tells us that if it closes like this, or anything around the level that where we are, that the sellers, are very obviously have taken control, and that's what you want to be seeing for these reversal on the higher time frame. But on the lower time frame, right, or not on the lower time frame, on the recent price action, you can see that we created an outside bar, which is also a very powerful indication of, one side coming in this case is the bullish ones. So in the previous candle, we did create the indications of buyers coming in. And now if we close with so it's going to be very interesting if we do close and invalidating this freshly created bullish outside bar, that's going to be a very bearish sign. Okay, so if we close by the end of the week below that level, and I'm going to tell you the level exactly, it's 171.36.8, at least on this price feed. If we close there below that level by the end of the week, that means that we have the possibility of getting some very nice downwards movement, very consistent, and you can position yourself in ahead of time for this. However, we also have at the same time, right, while that hasn't happened yet, while we are waiting for that day that event to happen or not, we have a fresh order block that is being retested. Look at that. The close of the candle, obviously it's not the close yet. The current price of this candle is right there at the lower border and now flirting with the, breaking it. That's on the weekly time frame. So it's not going to be definitive until the end of Friday. But so we have a fresh order block on the weekly. We go to the daily, and we see, yes, there is a very beautiful outside bar here where the sellers have come in. That indicates that as well. However, we do have a very quasi, a very minimalistic quasi, indicating here that we could have a reversal from this area, and perhaps we don't know which of the two will happen, if it's going to close and break and then completely melt down and go to lower levels, or we're going to have a reversal from here. So far it looks like it's going to break down and just melt. However, we are in the area, on the daily time frame, this is the area you want to be looking for a buy, as long as it is within that area. And on the lower time frame, we can spot some H4 order blocks. This is one. It's almost as wide as the daily, so that's not great, but it is what it is. It is there, and we also have on the H1 a fresh order block that is now being retested. So you have all the way from the weekly, the daily, the H4, and the H1 for a level, in alignment for a level to be traded, right? So this is the area, and it's about still quite large. It's almost 40 pips, but that's relative to the range, the daily range of the EJ. That's about what, 30% or so. It's range. So you have to express it as a proportion to its daily range, right? Because if you compare to something that's only doing 40 pips a day, then obviously 30 pips is, 40 pips is the whole day's range, which is too big for this time frame. So we do have this area right here. And if we go to lower time frame, the trick is, are we seeing in this area, in this H1, this wide area, are we seeing signs that the market wants to reverse from? Are we seeing that? So we can look at the lower time frames, let's say the 5-minute. That's even, we're already tapping into that area. Are we seeing in price action right here, are we seeing the lines or the structures, the patterns that indicate that there is something changing, that we're changing from a selling or a bearish order flow into a bullish one, right? There are many ways you can do this, by looking at the bodies, as candlestick combinations, as indicators, a breaking of trend line, at divergence in your indicators. There are many ways to do that. Doesn't matter which one you choose. Choose the one that you can use best, I would say. But in my case, what I look for is, obviously, you guessed it, yes, quasis and order blocks, right? So I'm going to be looking for that break in structure, that break of the neckline, which would be the 5 minute in this case. So I'm going to label that the 5 minute neckline. That's what I want to see break. If it doesn't break it and just continue lower, then there's nothing to do. You just sit on your hands and you watch it, do its thing. But if it does come back and break this, then you have a potential setup, right? So you could be looking for areas to go back into, to get into the trade, and we don't have any entry order block yet. So we'll have to wait. Actually, we do. There is one which is this one. Yeah, but it's not activated yet. It only activates after the neckline has been taken out, right? So it still has to break the neckline and then come back to this area for me to be able to take it. So that's an opportunity, and you're taking it all the way from the 5 minute, or at least what I'm showing you, but it has alignment all the way to the weekly. So use it as fast as you can, but by all means, test it out first before trying it out. Okay, that's on EJ. Let's look at euro dollar. Do we have something in the chat? I'm not great at all at making watching the chat. We have someone here agreeing with you.
There's a question about the. Oh, sorry. Go ahead.
Yes, I agree with this person that agrees with you, Dr. Cole.
Thank you. I'm not sure what that's.
I don't know either. I don't know either. I don't know who did you. I don't know what the issue was, but I agree with him.
Well, great. Thank you. Let's take a look back at the indices real quick if we can. Okay. A lot of activity all of a sudden coming into the market. That we have about the Dow. So we will take a look at that, but just want to pop over real quick. So the S&P is getting a little bit of a pullback, but more interesting is what we're seeing on the NASDAQ. So this is the daily chart on the right-hand side. You can see price popped above the previous day high and now is dropping back in there. So just like we talk about to the upside, if price really starts to stay in this level here, this could be where shorts might take hold and we could see price drop a little bit lower. Again, though, JOLTS is in 10 minutes. So to me, this isn't really time to be to be taking these trades. I want to wait personally. Everybody has a different style, as we've said 100 times today. But for me, I want to wait until after JOLTS and see how things look. But is a little concerning to see NASDAQ back inside that previous day's action. It didn't hold up very long there, but for me, no conclusions just yet. S&P is also pulling back, but it was never outside of yesterday's daily range. So let's take a quick look at US 30. US 30. Oh, go ahead.
Before you continue, if you allow me the indiscretion to interrupt you for a few seconds, Deanna.
Absolutely.
On NASDAQ, that on the I think it was on the 5 minute. I'm not sure, or was it on the chart where you have that green box right there? Mm-hmm. When I see that, what I see is trapped traders, because not long ago we were announcing, it's going to it is at all-time high. It's breaking out. I said it. You said it. I'm sure everyone thought it as well. This is uber strong. This is, the bulls are in control. And look at it now. Everyone else who just bought that idea is now underwater and in pain if they're still holding their position. So that's powerful. That's exactly the kind of price action that get people trapped all the time.
Yeah, it can be. It definitely can be. The indices, we've talked about, have this tendency to be powerful to the upside, or to, trend higher over time. But obviously, every time you get this like peak above all-time highs, and then eventually it drops back below. So there are times when there's consolidations where it happens a ton of times, and then other times when it doesn't happen as much. But, to me, I just seeing a dip below this previous day high is not enough, because price could easily, head back higher. For me, we just don't really know yet. It's concerning for sure that price popped up so high and then dropped back below. Kind of reminds me, honestly, of gold back when gold hit its all-time high. I don't know if it is, I think it's on the daily even. So where we saw this here, price came back, this was all-time highs and then just sank below. But it just dipped in there. So to me, I'm not concerned yet. I'm not holding the NASDAQ. I do have part of my position in the S&P. But like I said, with the upside, I want price to reside in that level before I get before I start to think, okay, maybe that is concerning. So just a dip in and then a quick reversal higher, no worries. If it really starts to kind of hang out in this level, that's when I would start to wonder about imminent progression higher. But again, jolts in 7 minutes, a lot can change in a short matter of time. So something to be keeping an eye out for. And there was a question in the chat about the US 30. The US 30 compared to the NASDAQ and the S&P is definitely a laggard. However, there's the potential for a pretty decent setup if the continuation is higher today. So if price doesn't continue higher, then this trade will likely fail. All trades are probabilistic. There is no trade that is a guarantee. And so if you're taking a trade like this, this is just a matter of understanding that it's a probabilistic setup. Again, not a guarantee. This pink line here is the previous day low. So you can see, again, I don't trade the Dow. The Dow is, it moves similar to the other indices, but not the same. And it is a laggard. So whereas the S&P and NASDAQ have been much stronger, you can see just looking at the daily action, the price has been a lot more sluggish. There are reasons people prefer the Dow over other indices. The people that trade it might prefer it because of sort of the gentler like personality compared to the NASDAQ, especially in the S&P. But because we have this previous day low here, if price were to dip below here, dip below this previous day low, take out some liquidity, and then push higher and again start to reside, sort of in this area here, this could be an area of interest. But in order for that to happen, I'd want to see price dip below the previous day low and then recover that previous day low, hang out a little bit, and then potentially target long. But, again, it's a probability because you have no idea. Maybe that's it for the indices today. Maybe we already got a bit of a one-day correction, sort of, in the NASDAQ, right? It wasn't a green day, but it wasn't really a correction. It ended higher than last Friday by a good chunk. But that would be something to keep in mind. As the days goes on, do we recover this? Do we hang out in this area, or do we absolutely crumble? So that's what I'll be looking at. 4 minutes to go and almost time for us to wrap up as well.
Yes, and actually, I'm gonna say something here on. I'm looking at NASDAQ, but before I do so, this is yeah. Let me switch to my screen so you guys can. Well, we don't see this very often, but if this is going to happen, what do we see here? These two candles, right? I asked this before, and Manish had it right. That's an outside bar, right? And some people call it abandoned baby or abandonado bebé, something like that, which I like. Although
name.
It's a terrible name. It's a very sad and terrible, cruel name, but it's very catchy, or at least it makes you wonder, huh? What is this? And that's a good thing, right? It's sticky because even for maybe I don't know. But let's continue. The outside bar, we have, which is these two candles. Currently, it's not showing anymore an outside bar in the next candle. But if you have imagine if an outside bar is powerful and it's an indication of trapped traders, because that's what inside bar means, right? That's the psychology. That's the dynamic of the psychology of those market participants, as they are. Because actually, do we have 3 minutes? Yes. So what happens with an outside bar is that everyone, you have a candle, right? So this one tells us predominantly over that day, people were bullish, where buyers were in control. That's why we have a bullish candle. The next candle, when we break out of this high, right? All the traders that are still bullish and think that this will continue to go are getting in. They're getting ready. If they're not already in, they're getting ready, buying this breakout. And then it turns out closes the whole day below the previous candle. That's the anatomy, if you will, of an outside bar. Right? The psychology behind it is that they're completely on the right side of the wrong side of the market, and they have to either close their position or be prepared to feel a lot of pain. Now imagine if the next candle will close as well as a outside candle, outside bar, I mean, meaning taking the high and closing below it. It's not showing anymore, but imagine if it were to happen, that's a double outside bar. And if both of them are bearish, that's a very strong, even stronger sign that a lot of sellers are coming in and a lot of buyers are getting trapped on the upside, as the fake out breakouts that they're not happening. So that could be, it's not currently, now that I start talking about it, it's not there anymore. And we only have, well, we don't, it's not only, but we have 1 hour still to go, right? So after the news in about 40 seconds, 40 seconds to the news, but after this candle, this is on the H2, so the H2 still has 1 hour to close, so we still have to be patient. But if you check this 1 hour after we finish our stream, this closes as a outside bearish candle as well, then you will have a double bearish outside candle, meaning that's a sign you want to pay attention to. All right.
And if you look on the hourly, it is kind of a broadening formation. Now, Victor, do you wait for the candles to close in order to? So that's why you're waiting for the 2 hours. So if you look at the hourly, it's definitely like a broadening type formation.
Yes, I do see that.
Yeah. But again, to me, as long as we don't start to reside below that previous day low, that is what I'm looking for. And there's a question in the chat about why somebody is trading the Dow instead of the NASDAQ. I don't personally trade the Dow, but I know that there are traders that prefer it. Typically, why I hear is because they kind of prefer that it's not quite as wild as the NASDAQ, but every asset has its own personality and character. And so for some people, maybe the Dow suits them better. I don't know. Victor, do you ever trade the Dow?
Trade? No. I obviously
I don't know many people who do.
I do trade, specifically trade with my strategy. No. But we are at the end of our stream, and before we let you go, or you let us go, hit the like button, yes, and subscribe to the channel, yes, both of them. All right. We will be having in 44 minutes a workshop on Discord. You're all invited. It's gonna be a lot of fun. We're gonna go, dive deep into these topics. We will have 10 hub credits for a winner in those who attend. So you're all invited. How to get in? You ask yourself. It's in the Discord of our of the Fivers. So you buy an account if you don't already have one. Within the dashboard, the hub dashboard, on the lower left corner, you should have a link to the Discord community. And if you don't see it, go onto the live chat and ask them for support. But you should be able to see it, and that's your entrance into the realm of the Discord community, where you can be interacting with us. And perhaps I might even trade some live, depending on what the opportunities are. But in any case, you are all invited. I would like to thank everyone, including Marina and all those great traders in our community that are coming and supporting our show. Any last word, Deanna?
No, I'm so grateful every time. I feel like I say the same thing every time, but it's so much fun when you all are in the chat and when you're active. And even though we can't always keep up with all the comments, I try to read all of the comments and react to the ones that we're able to catch. But it really makes it so much fun to have you all here, and look forward to seeing you all next time. Victor, as always, super fun to hang out with you. I feel like we're all so spoiled to get to have you have our time with you every week. So thank you for being here, Victor. And thank you for sharing, especially for me anyway, the crypto stuff was super interesting and super helpful. Really appreciate it. And we'll see you all soon.
You are way too kind to me, Deanna. Way too kind.
Well,
all right.
I'm glad you think so. You deserve it.
All right. See you all next time. We're gonna be here together. Deanna, thank you for your time, your presence, and all those kind words. I feel I am the one privileged here by sharing this space and time with you. So thank you for that. Everyone else, thank you for watching and keep on coming to our streams. Let's make this channel a even bigger and better channel than it already is. We are celebrating all kinds of smashing through all kinds of milestones, and thank you for that because you make it happen. See you in our next episode. Bye-bye.
Bye, everyone.